Uneducated Economist here. So, let's see here. Let's talk a little bit about what I got going on this afternoon before we get started on the video. Let's see here. So, I had a load of sand brought out to the house, 4 yards of sand, and I plan on setting a bunch of patio pavers to extend the patio that I have out the back door so that I would have more room for barbecuing and hanging out on and stuff like that. Also intend on expanding my fire pit so that it would be a little bigger than the one that I have now. I basically just took some retaining wall blocks and built a ring out of it like a lot of people do. But it's small. It's like, maybe, I don't know, 2 feet across. And it would be nice if it was like 3 feet would probably be good. So anyway, I intend on doing those two things today. Cool. Hit the like button when you come in. I see a bunch of you have already done that. We got 11 of you watching. 5 of you have hit the like button. More of you hit the like button. We'll get more people into the video. The algorithm will pick up the video and start sending it around for more people to join in. This is a pretty good one. If you don't subscribe to the Wall Street Journal, I left a link to a few other ones, including the Wall Street Journal. But this is a pretty good article. I believe it came out yesterday, and it's about New Development Bank, right? The New Development Bank. And this is pretty interesting when you hear some of the quotes coming out of the Wall Street Journal again with this article. And this is what it has to say. This is one of the quotes. The bank has had to take on increasingly expensive debt to service the old borrowings and stay current with its own liquidity requirements to bolster its resources. And here's another quote. The bank should be concerned about its inability to access capital markets. Here's another one. It's not a problem that can be immediately solved. Right? And it goes on to say here, it has all but stopped making new loans and is having trouble raising dollar funds to repay its debts, according to an examination of its finances. Now, this is a pretty interesting story here coming out of the Wall Street Journal because it's talking about this new development bank. And this was a bank that was set up by the BRICS, right? Brazil, Russia, India, China, South Africa. And this new development bank is going to be like part of the new global transaction system, right? These are the people who are going to be, helping to make loans to emerging economies and, be part of this BRICS nation, New World Order kind of takeover. Well, I guess it wouldn't be the New World Order, it would be the opposing New World Order. I don't know how you describe it, but you know what I mean. However, this bank is having some major issues. And now this is what I found interesting. If you go on to read some more of this article, it says here, this thing was set up in large part to reduce the developing countries' dependency on the dollar-based funding. Well, it's an alternative to the IMF. That's what the point of this thing was to set up as, right? Was to be an alternative to the IMF. And let's see here. The BRICS Development Bank is fighting for survival now, threatened by its own reliance on the U.S. currency, on the U.S. dollar. That's right. And so now when we think about it, like here it is, the BRICS nations, here they are like spreading all this information. Everybody's talking about how there's this de-dollarization. Everybody hates the dollar. Get out of the dollar. Don't be part of the dollar. We're not going to use the dollar anymore. And yet here this bank that was set up by the BRICS nation is now suffering under the weight of all their dollar-denominated debt. Now, here's the last quote that I'm going to read to you guys out of this article, and then we'll start talking about it a little bit. We're only 4 minutes into it. Okay. After setting up shop in 2015 with $10 billion in committed capital from the 5 founders, talking about the BRICS, the members found it would be difficult to rely on China's banks and capital markets. That's when the developing bank began to borrow billions of dollars from institutional investors on Wall Street, as well as China's state-owned banks. Some of what it borrowed was denominated in yuan, but around 2/3 of the bank's borrowing are dollar-denominated, hardly in line with the bank's stated aim to break their members' reliance on the dollar. Now, isn't that an interesting article or interesting story to read about? And it falls right in line with a lot of what we have been talking about how the dollar is so prevalent within the debt base around the entire world that it is going to be very difficult to get out of the dollar without strengthening the dollar itself. Look what happens when the dollar does weaken. See, here India is part of this, BRICS nation. Look at some of the articles down there. As soon as the rupee starts to strengthen, what do? They go out and buy a bunch of dollars with it, right? As soon as the dollar weakens to the rupee, they load up on it. The last thing India wants is for the rupee to strengthen. They're trying to be an exporting nation. If the rupee strengthens, then it's going to make it ever more difficult for other nations to buy their products. They don't want that to take place. And that's the same thing that we have been talking about quite a bit, from this whole like mass media attention to this de-dollarization that seems to just be running so rampant through this macroeconomics talking that's going on out there. It just blows me away to hear it. And then when I see articles like this coming out, it's just like, that's exactly right. So here it is, the BRICS nations in their banking system that they are trying to set up to try and get out of the dollar is dependent on the dollar, right? And now it's suffering under the weight of stronger dollars and higher interest rates. And this is another thing I think about. It's just like, okay, so now this bank who's been lending money to these emerging economies who are trying to get out of the dollar are now not able to lend money to these nations. So now who's going to step up and do it, right? The IMF, and they're going to end up loaning out dollars out there, making the dollar strong again. I mean, that's kind of what I see, right? If these banks aren't able to do it, then who is? Yeah. Reading articles brings YouTube revenue. Yeah, I can, but you also got to talk quite a bit, and you got to bring your own opinions to it, and you got to talk a little bit more than just read the article. I mean, but yeah, it does. All right. What does De-Dollarization mean? It means that nations no longer want to use the dollar. The dollar is going to be strong in Minnesota. Yeah, I graduated in 2011 with only 536 adults. I graduated in 1995. I graduated high school with 32 people. I kid you not, 32 people in my graduating class. All right, you're citing a news article and believe what you are reading. No, I don't believe what I am reading. I've already believed this before I was reading it. That's why I was telling people about this long before, right? That's what's going on here. And I'm using these news articles as proof of what I had predicted long ago, right? That's what it comes down to. It's not like, there's a million news articles that talk about de-dollarization. I don't believe any of those, and I don't necessarily believe this one either, but I do believe the fact that this bank is suffering under the weight of the dollar, right? You can believe that part of it. Now, whether or not the opinions that go with it are accurate or not, whatever. All right, let's see here. The key to life: don't eat out, don't spend, do buy soap, wear the same clothes, don't leave the house, sit on your front porch for 20 years saving money. Yeah, no, because you got to enjoy experiences, man. You got to leave the porch every once in a while. You don't have to go spend money after you leave the porch, but you do have to leave the porch, right? All right. Make sure and hit the like button. Yes, please do. I'm going to be out here for a while if you like. However you guys want to hang out. What are the kids doing? They are getting some haircuts because we are going to go get our pictures taken soon, do like a family portrait stuff. And then they're doing some other shopping. Oh, shopping for some shoes. That's it. And then we're going to barbecue chicken later after I set some paving stones. All right. Cash is trash. I will take it. Yeah. Simon, what's your take on Lynn Alden macro assessment? I haven't listened. I got an interview that was given to me with Lynn and Jeff Snyder that I haven't listened to yet. And I don't mean any offense to anybody out there who is into the macro, information world or stuff. But I don't listen to other people. I don't listen to other YouTubers out there. I don't really, follow any one particular individual. I do catch the occasional interview like this Lynn Alden, Jeff Snyder one. And every once in a while I'll listen to maybe another, George Gammon or Peter Schiff or something like that. Just for a particular, I want to get some particular perspective on it or something like that. But for the most part, I don't really listen to any other economist out there because I'm really trying to form my own ideas, my own thoughts, my own opinions. And I found a lot of times, like especially when I would listen to Peter Schiff because he's so good at it, is that I would listen to him, and the more I listened to him, the more I started to sound like him when I would start to speak and stuff. And so I realized, like, the more you listen to people, the more your subconscious is going to pick up what they are saying, and then you're going to start sounding like those people, right? So it's not like they have information I don't want. Like, I want the information, don't get me wrong. I mean, they have good information, right? And I think like anybody who is studying economics really needs to study a broad, like, a broad amount of different people out there to really get a good understanding of what's happening. Like I said, for me personally, and for the growth of this channel and for things that I'm trying to do, I'm really trying to form my own opinions outside of taking the influence of other YouTube influencers, and other economists out there. So although I will take in a bit of information occasionally from one, or from a particular like interview or something like that, I'm really trying to stay true to my own thoughts, my own opinions, my own, information that I'm gathering. And I'm really trying to gather more of an economics philosophy and understanding of how like the broader macroeconomics forces end up working. Like a lot of times, when you study economy, most people are studying it from like an investment point of view, or a business point of view, or a political point of view, or some kind of point of view of this nature, where you have like, a particular agenda that you're trying to follow or understand or be aware of, and then you incorporate this into the economy. And you say, okay, well, because this particular vote happened, or this particular group is elected, or whatever is going on here, this is the cause for this effect that's taken place over here. And I think a lot of times that is misunderstood. Like you can really point out all the reasonings behind it and say this is what's doing it, but then really, I mean, if you take a look back at it, you can say, okay, well, you're looking at it from a political point of view, or somebody's looking at it from an investment point of view, or whatever, or social point of view. I look at the economy from an economics point of view. Like, that's the way I want to see it. I have no skin in the game. I'm not looking at it from an investment or business or anything like that. If anything, I'm looking at it from an entertainment point of view, right? Like, I'm trying to come out here and entertain with the information. And in that sense, I don't really have like an agenda for which way it should go. Like, as far as investments and stuff, hey, that's up to you. I don't know how to, I mean, if I was a big time investor, I'd be talking about investments. That's not what I do. I try to understand like monetary policies, the cause and effects from that, how the people that can, like the average everyday guy, how they understand the economy and what their actions are once they hear information or start to deal with information that's coming to them. A lot of times it's misinformation that they understand, and then they start to behave in ways that I'm like, whoa, what do like you're missing it, right? But again, it's just because of that, of the way they understand it. It's just like, blame it on Biden, and I'm like, oh, man, well, if you blame it on him, then you can't blame it on the real problem, like the FOMC. All right, moving on, my little rant. Let's do. Hey, thank you, Lumberjack Landlord, for being here and for that $10 super chat, man. Very cool of you. Happy I caught the live. Real estate continues to defy all crashers. Home under the median price still last only days on the market in most areas. Keep up the great work, Simon. Well, thank you very much, Lumberjack Landlord, for the $10 super chat. That is very nice of you, man. And I tell you, I'm trying to follow. My area is kind of unique as far as real estate, but I really try to look locally and think globally, right? So you see it for yourself, like firsthand, and then you try to understand it on a bigger picture. And I just kind of look at my own personal house and how much it had increased. Like, when I bought my house, I thought for sure I was buying it at the absolute peak of what prices could possibly be. I was buying it at, I got a 3.2% interest rate on it, right? This is like, this was like the last of it, the last of the last moment that you could get the good interest rates on. And then like from that point on, it was popping off. Now, since then, the estimate, Zillow estimate on my house has gone up dramatically. Now, yeah, it went up like way more. It was going up more than I could earn at my day job and YouTube combined. Like, that's how much the house was going up, and it was ridiculous, and it didn't make any sense. Now, the price of the house has come down on the Zillow estimate a lot, like better than 10%. It was like 10 or 15%. But it's still at this point, like, I don't know, 15% higher than when I paid for it. I mean, it was that ridiculous how much it had gone up in the year that after I had purchased it. It was just like insane. So when you have this much like uncertainty taking place throughout, not just from my housing market to like, wherever across the nation, it is very difficult to understand that this, like, you can say this one sentence is the housing market. It's not going to work like that. Like, my place is so much different from other places that I read about. And it's hard for me to like relate to these other places when I see it here happening in my area. I don't know. Does all that make sense? Maybe I'm just babbling too much. Let's move on. Thank you very much, Matthew. Man, it's cool. Man, it's cool that you're here. All right. Real estate is down like 10, 20. Okay, it's not. All right. I throw my silver to trash box after the thumbnail. Okay. All right. Rents at the mid to low end are still increasing. All right, so let's see here. United States needs to go back to gold, silver-backed currency, and perhaps gold-infused dollars. I don't feel value when I hold cash anymore and protect wealth and stability. Okay, Woods is in. All right, great statement, because I thought very much the same thing, that we need to go back to a gold and silver standard. Here's the problem with this, though, Ben, is that if we go back to a gold and silver standard, we're not a producing nation. Like, a lot of people will argue with me with that. They're like, dude, we produce all kinds of these wonderful products, and you're right, we do. I mean, we produce some really good products that have a high demand around the world. The only problem is we don't produce enough of those products, right? So we have a trade imbalance, and that means that we end up importing a lot more products than we export. And when you import more than you export, what you are exporting is dollars. Now, if we went back to a gold standard, which is great because everything would be real stable, what we would end up exporting is all our gold, because we don't manufacture anything to bring in gold, or not enough stuff to bring in gold. So if we really want to have a balance of trade, what we're going to end up doing is we're going to have to lower our standard of living to the capabilities of our production, which we already learned from Say's law that is not going to leave us with a whole lot of money left to have a nice standard of living with, since we don't really produce anything. Our standard of living comes from the debt issuance, those U.S. treasuries, and the demand for those U.S. treasuries that come from it. So that's really where the problem with going back to a gold standard. Now, personally, I think holding on to gold and silver is probably one of the smartest things that you could ever do, because it's an awesome insurance policy against those third-party claims. You don't have to worry about whether or not the dollar has value or anything else. It's gold and silver, it's in your hand, and you get to protect it. Now, here's the other problem when you start thinking about it on a global scale. When you start thinking about how the dollar is the world reserve currency and how gold could be replaced, or can replace the dollar as the world reserve currency, because nations around the world can just say, hey, let's just abandon the dollar, boom, we're done with that, let's move to gold, and we'll start doing deals in gold. So I'll trade oil, whatever, and we'll use gold bullion back and forth, or however you want to work that. Here's the problem with this, is that somebody has to pay for the storage, somebody has to pay for the security, somebody has to pay for the transportation. Now, is that you or me who's going to pay for that when it comes to these nations' deal, right? Because that's what the nations are going to ask. It was just like, so we have this gold that needs all these services, all this protection, all this transportation that's involved with it. That's an expense that comes with it. Well, if we use U.S. treasuries instead of gold, well, we have something that has at least an interest attached to it. So as we hold on to this, it doesn't deteriorate due to security and transportation and storage. It's actually gaining value, because really it's more of a click and a button in an account at the Treasury, or at the Fed, or whoever, right? There's really no actual cost of holding it. It's actually a benefit to holding it, because you almost get an interest rate off of it. So you see where the gold standard is actually going to fail on a global standard as well. Now, will it create a stable currency? Yeah, absolutely. Like, prices would not fly all over the place like they do, especially when we have recessions, or, mass money printing, or whatever is taking place at the time. We would have a much more stable currency. The only problem that would come from that stable currency is that we would have boom and bust cycles within the business, and a lot of people are not going to be able to handle that. right? Because when you have like boom and bust business cycles, people are just rolling in it during the good times. They're like, man, look at all this. It's just flying. We got it all good. And then all of a sudden, the concentration of wealth lands into this a handful of people. Business slows down dramatically because there's not enough currency out there because there's only a limited amount of gold. And then the people who have concentrated all this gold have to give it up. And then boom, the redistribution of wealth again. And this is where the cycle starts over, right? So this is the other problem that happens with the gold standard. Now, I'm cool with it. Like I'm down. Let's do it, man. Like I'm ready to go ahead and play that game. But I really don't think that most of the people around the world, or even, like especially here in the United States, are ready to do that. Like most of them are so clueless about how the monetary system works and what it is that they would need to do to protect themselves, that we would have like mass like depressions and people just like hungry on the streets and just like homelessness running rampant. And then we'd have like these booming times that people would not take like proper advantage of, and they would just go like just diving into luxuries and not paying attention to what it is that they should have been doing with that money while they were earning it. Wow, am I talking fast? I must have drank too much coffee today. Sorry guys, I'll try to slow down some. All right, did I get another super chat? I did. Thank you, Local Enterprise Broadcasting, for the $9.99. EU, how can you ignore politic factors in the economy? Politics influence policies that can help or hurt the economy in a pretty big way. Yeah, I guess it can. I mean, there's no doubt about it. But really what these politicians are doing, and if you look at it from this point of view, is that they are reacting to the economy. They're not actually doing like I guess there is the influence that happens from it, but they would not be able to influence it if it wasn't for the fact that the economy is in the condition that it is in, and they didn't put it in that condition. It just grew to that condition, and they took advantage of it, right? Now, okay, let's say how like the politicians took advantage of the economy and the position that it's in from the economic forces that are at play. All right, so as the United States was on the gold standard and they switched over to the fiat standard, there was that moment that they were going to lose all the gold, right? Like we were a manufacturing powerhouse. We're going through war, right? So like the world wars were taking place, and the United States was just selling everybody everything under the sun, food, armament, whatever they needed. And all this gold was coming back to the United States, man. We were just loading up on it. They were even sending it to us for safekeeping to get it out of, keep it away from Hitler or whatever. Right? So the United States ended up with all this gold. And now it's just like, okay, now wait a minute, we got all this gold, and now the rest of the world is kind of deprived of money, right? I mean, like real money, not just currency. I mean, because this is the currency, but they're deprived of money. So now we need to provide them with currency. And this is the problem, right? So the United States really, 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 really wanted to hold on to this gold and not give it up. And so they were like, okay, well, let's, play with these economic forces here that would normally be at play, right? And we're going to try and do something that's going to be a little different. And instead of redistributing this gold back out to the rest of the world, we're going to sever the gold standard and we're going to give everybody debt-based fiat currency, and we'll see how long that lasts. Because the economic forces are still at play, right? I mean, they're still going. And now you can go ahead and bring in as many political people or whatever, but this is a banking change to the economic forces that are at play. But they're still at play, right? So here the United States has become the consumer, which if we were Rome, it would be like the equivalent of just going around conquering worlds, right? Conquering the world, taking over nations and taking all their natural resources and stuff. What we did instead is made these nations start selling their debt or selling their commodities in US dollars, right? And using our debt as the gold, essentially, and then forcing these nations to do it, or else we'll bomb the hell out of them, right? So like this is how we force the world to make sure that they use the US dollar instead of gold to keep keep the trade going. And it's like, if you're talking like in a political fashion like that, I don't know how you vote that out. Like this is new world order, like global elitist stuff that's happening there. So if you think you can vote that to change, all right, man, show me the candidate who's going to step up and do that, man. All right, because like I mean, I don't know where the hell he is. Like people are talking about Trump doing it. All right, go ahead. Let's see it, man. I didn't see anything that dude did that came even remotely close to taking out the New World Order. Like, if anything, he, like, expanded it with Jerome Powell. I mean, the two of them were in cahoots. I don't know if you guys knew that, right? I mean, it was obvious. When Trump was out, do you remember Trump saying, there's no inflation? The Fed should be printing money. They should go into negative interest rates. The Fed should be printing money. There's no inflation. Remember Trump saying this stuff? Can you imagine what the economy would look like had we done that? Like, I mean, does anybody remember that stuff? Like, I do. Like, I mean, I was laughing when I heard it. I said, I cannot believe he just said this, right? I mean, this cannot be true, right? But I mean, I understand now that it was more of a credible threat to lower the inflation expectation and raise the real interest rates. Like, that was the real ploy behind it. It was a psychological trick sorry, the trolley. It was a psychological trick that they were trying to pull, because what they were really trying to do was raise the real interest rates. If you can lower the inflation expectation, you can raise the real interest rates. That was the whole point of all that news media broadcast about firing Jerome Powell and how, they should be taking the interest rates lower and going into negative interest rates and all this other stuff. Like all that hoopla that he was babbling out there was to lower the inflation expectation and to raise the real interest rates. If you don't understand how that works, it's real simple. If you're an investor who is anticipating on getting a 2% return, right, but you have an inflation expectation of 1%, if you can lower the inflation expectation, because then you would have a 1% real return, right? So your inflation expectation is 1%, you're getting a 2% return, your real interest rate is 1%. Lower the inflation expectation, you can raise the real interest rate to 2%. So if you lower the inflation expectation, you can raise the real interest rates. That's what the whole game was all about, right? And again, the credible threats that, they use. So if that's like the political game, like that's part of it. I mean, that's how I see it done. But again, these are all reactions to the economic forces that are taking place, Again, I don't know who you're going to vote for, who's going to change all of that, because to me, it's more about the issue of how the United States really has no way of really bringing in new income, right? New money. How do you get the new money in? It's from manufacturing, it's from production, it's from savings and investment, right? The United States doesn't do that. We go into debt. We go into debt and we buy stuff. That's what we do. We're a consuming nation and we're a debt issuing nation. So there's no political thing that's going to change that. I mean, really what ends up having to happen is the people themselves, right, can do this. They can say, okay, that's it. I am not buying any more luxuries. I am saving every dime that I earn and I'm going to invest it or save it or do something smart with it. I am going to reuse everything that I have. I am not going to buy anything new. I am not going to participate in anything that's luxurious or, fun, because that would, or spend money on anything that's fun, right? And this is the type of thing that I'm going to do and teach my kids to do it and teach their kids to do that as well. Right? So that it goes on and on for generations. And if you can do this for enough generations, then maybe, possibly, you can have an industrious people who can start production and start, producing things that can go out to the rest of the world. But the problem with that is that if you start depriving the world of dollars because you're producing things for yourself, then what they're going to do is they're going to stop buying your debt. And that's the lack of new money coming into your system. And so all this is very painful. I mean, we can do it. Again, just like the gold standard. Hey, if you want to go on for that, let's do it, man. I'm ready. Because I really don't have anything anyway. I got this old car and I have a garden and I have a few old tools that I can build things with, but I don't have a whole lot. So, as far as like the whole like taking everything from you, I don't have anything to really take. So it's just like I'm not really worried about stuff like that. All right, moving on. Let's see. Was there another one here? Hey, the infamous NYC. Thank you so much for the $10. Do you think the WHO is being used to help bring in new money by forcing countries to purchase jabs via early contract, as well as World War III narrative to get the nations to buy weapons from America? I mean, I think all that is definitely. I mean, I don't really follow much of that kind of stuff. Like, to me, when I was hearing some of the stuff that was coming out of the central bankers about like how it is that once everybody is vaccinated, then the economy will open back up and everything will be cool again. And I'm like, how in the world does a central banker know that? Like, it's like, that doesn't make any sense to me. That here a central banker can claim this before it even took place, before anybody was really even getting vaccinated or anything. Here it is, they're talking about how it is that once everybody's vaccinated, we can open up the economy again. And I mean, understanding, like, I guess that was wishful thinking. I mean, I guess that's what it was. But to me, it was more like an exposure of the plans that they had. Like, that's really what it was. So, um, yeah, I don't know. I guess I really haven't given that much thought. I'm sorry, infamous NYC. I really appreciate the $10, but I guess I would have to think about that a little bit more before I could give you a real good answer on it. Thank you very much, Mark, for the $20, man. Very cool of you. Hi, Simon. Keep on hustling, but don't forget to enjoy the fruits of your labor along the way. Yeah, absolutely, man. And that's like, and dogs are barking over here. That's really like something that my wife and I were talking about just the other day. It was just like, really, because we've been together for a long time, and we've gone through a lot. Like we were really, really poor at one time, broke, drunk, just not paying attention to life, not doing anything right. And it's weird. Like we stuck it together. There was a lot of times that we really shouldn't have been together, and there was like behaviors that really said that man, that it's like you guys really don't shouldn't be together at all. But you stick it out and you work through things and you do stuff, and then you start realizing, man, there is a lot to enjoy about life that you were missing out, and it was really just going and doing it. Like really just, a lot of people look at like you need money to do things, but it's not the money that does it. Money brings spontaneity. So there's like, you can do things like, hey, yeah, let's go to the concert or whatever. Like you can, if you have money, you can go do that. But it's not that. It's the way that you are doing it. Right? That's the important part. And I was listening to somebody talk about it earlier, and really it makes a lot of sense. If you are aware of the way that you are feeling about the things that you were doing at the time, right? And just be aware of how you feel about it. And take on the awareness that you are experiencing this for the very first time. Like, think about it like that. Like, this is the very first time that I have ever done this. And if you have that kind of feeling when you go into things, you would be amazed on how much more you enjoy, like, everything that you are doing. Because it feels like this experience that you've never had before, even though it might be the same thing you've done a million times. But if you take on take the conscious idea that I'm going to be aware of the idea that it is the first time I've ever done it, that kind of feeling, you will be surprised on just like how much more you enjoy your life, right? The fruits of your labor. You don't even really need to spend it. You just go and enjoy it. Just go and enjoy life. Anyhow, moving on. Thank you very much too. I appreciate the $20. It's very cool of you. All right, let's get down here. What is de-dollarization? Okay, de-dollarization is the idea that nations around the world are going to get out of using the US dollar for transactions amongst themselves. So when two nations, for example, want to do deals, like we got Russia and India, right? Russia's selling oil to India, and India is using rupees for the trade. Typically, that trade would be done in dollars. Right? So as these nations are using dollars for this world trade, it creates a demand for dollars that is outside of the United States. Right? This demand for dollars then gives strength to the dollar that gives us a purchasing power here in the United States that is quite unique since we don't produce anything. This is dollarization, global dollarization. Now, de-dollarization is the idea that India is going to be buying oil with rupees as opposed to dollars. So that's the de-dollarization taking place. Argentina says that they are going to be buying their imports from China using yuan. Right. Same thing with Egypt. Same thing with like even places. I think even like France said that they were going to be doing some deals in yuan as opposed to using dollars. Now, anytime I hear this, I always think to myself, and this again, we should talk about yesterday's video a little bit too. But when I hear this, I think like, why would you want to use yuan as opposed to dollars? Like if you have dollars and you have yuan, right? And it was just like, well, which one of these can I use? Well, I'm going to hold on to the dollars and use yuan. What does that say about the yuan? Right? Like, I don't want it. I don't want this yuan. I want to hold on to the dollars. And that's exactly what Argentina is saying, is that they need to hold on to their dollar reserves, and that's why they're actually using yuan. And so when we think about Gresham's law, now, in yesterday's video, I actually stated Gresham's law incorrectly. I said that good money chases out bad. But and I don't mean to give excuses to myself or about myself to myself, Jesus. I don't mean to get excuses, but I had tried to do that video like 3 times. And a lot of times when I'm doing these things, I repeat myself and I forget whether or not I have actually said something in the video. And because I had tried it before, you understand, like I did another take on it, thought I had put that information in the current video that I'm doing because I had done it so many times that now I forget what I had actually said in the video. All right. It happens, right, when you do a bunch of takes on a video because you just can't seem to get it out. All right. So yesterday I said that good money chases out bad, but that's not really the case. It's bad money chases out good. And now that's looking at it from the seller's point of view, right? Like I'm selling an item and I'm going to look at 2 different currency that comes to me because Gresham's law would say that the person who is going to sell the item and get one of these 2 currencies is going to choose the good currency over the bad currency. Right? And so now as he's taking on the bad currency or taking on the good currency, that only leaves the bad currency in circulation. So bad currency would chase out the good as people would hoard the good currency. But I was looking at it more from the buyer's point of view and saying, okay, well, I have 2 currencies here. Which one do I want to hold on to? Right? And I will give up the bad currency. And so what I'm thinking is like good currency drives out bad in that sense, where from the seller's point of view. And I didn't really clarify that, so I said Gresham's law kind of backwards on it. But anyway, I think the point of the video is still, like the rest of the points were still quite, quite accurate to the theory. But anyway, I did say it in reverse there, kind of. So anyhow, what were we talking about? Moving on. Did I get another super chat? No? Okay. You guys are so awesome here. Okay, I'm old and more conservative, and everyone should be a resto mod before they die. I don't know what that is. Do you think the introduction of BTC ETF will tame the price of Bitcoin the same way COMEX suppresses the price of gold? I don't know. I guess it could. I mean, I'm still, I still wonder, like, exactly how long it is that the silver suppression can go on. Like, I understand, like, I was big time into, like, crash JP Morgan, buy silver at one time when they were, like, had this huge silver short position. And I do wonder, like, at some point, what would happen when somebody who goes to make a cell phone or a computer or some kind of solar panel or something, and they can't get their silver, like they can't secure it. What happens then, right? Because really that is the question that I have when you have such a massive paper position going on. Like you can only provide so much physical silver out there. You can provide all the paper silver in the world. Like you can just keep on printing it, right? All the paper silver out there, and you can have hundreds or even 1,000 ounces for every ounce that exists in physical form. You can have it for investment purposes by just issuing out paper. But when it comes to the physical ownership or the physical acquisition, if you're a manufacturer or something, there's only a limited supply. I mean, there's literally only so much physical silver out there to be had. And if there comes a day when you're like, okay, well, I need my order of silver, and I'm like, I don't have it to sell you. They're like, you can have the paper price at whatever you want. The physical price might go quite be much different, right? It can go quite high. And when I first started buying silver, like 35-cent premiums, 50-cent premiums, that's kind of like the things that you looked for. Now, like, I mean, the premiums are ungodly. I don't even know. It's hard to even go shopping for it anymore because the premiums are so much that I'm just not even used to even shopping that way. So, that's like already you can see that there's issues taking place within it. I personally don't look at silver or the gold or anything else as something that is like an investment, right? An investment is something that has an interest to it, something that has a payment to it, a dividend paying stock, for example, or even just investing in a company itself. These are investments, something that's going to give you a return, something that's you have an expectation from as far as a return goes. But when you buy gold or Bitcoin or any of these other things, what you're doing is you're speculating. And even when it comes to like, the manipulation coming out of the banking system, they're speculating as well. And, whether or not they can actually continue to offer a paper paper derivatives of these things, where the physical, or in the sense the digital physical for Bitcoin or something, becomes limited. That's really where I think like the difference would be. So I don't know, like, whether or not they can suppress it, I'm sure they could. I'm sure they can try. But it's also on a global scale too, and I guess silver and gold as well. But you know, when you make laws in one nation about Bitcoin, that doesn't change how another nation is going to act with it. Like, they can continue on doing the same thing. So you have to, like, I mean, in order to like really suppress Bitcoin, you would have to have like a global effort from all the nations around the world simultaneously to do it. Otherwise, whatever nation is like friendly with it, they would be the ones who get, you get to take advantage of it. I like that you try to keep a fresh point of view. Well, thank you, Carol. I really appreciate that. I try to as well. I mean, like, we could all be repeating the same things over and over again to each other, right? Just parroting what everybody else says. But what's the point of that, right? I mean, that's not why I started the channel. I started the channel to start a conversation. That's really why I started the channel. It was just to actually talk economics with people. But, as I found, like, the more I studied, the more I realized that there is a lot of different point of views out there. And when I started looking at like the different point of views, I realized that a lot of people are trying to sell something. Like, they're trying to sell their program, they're trying to sell their product, they're trying to sell their book, they're trying to sell something, and so they're leaning you in a particular direction. Like, hey, I got whatever, and that's like, there's nothing wrong with that. That's how everybody does it, but that's not what I'm doing, right? So I looked at things in a much different fashion, as opposed from a particular direction. And I think that's what made my channel a lot more unique than others. If someone gave you $1 million, how would you invest it in the current market economy? I don't know. I'd probably roll it over in 3 months treasuries for a while. That's probably what I would do. I mean, I don't know. Like, right now, I think cash is a better position to be in than just about anything. Charlie, again, I'll let you guys look at it. So I think cash is the better position to be in right now. So with $1 million, yeah, I'd probably just roll it over in 3 months treasuries for a while. That way you had fairly quick access to it. And then I would wait for the Federal Reserve to actually give a signal of a pivot. Once I see the 5-year, 30-year spread start to widen. Is that it? The 5-year, 30-year? Yeah. Once I see the 5-year, 30-year start to widen, then that would probably be my signal to start trying to jump into the stock market. So I don't know. That's probably what I would do. Like, right now, I'm thinking sitting in cash. I think cash is probably the better position to be in. There's going to be a tightening of liquidity and the demand for dollars to pay off debts, very much like the bank that, we're talking about this, what do they call themselves? New Development Bank. Just like that. I think that same story is going to start being told all over the world, all over the nation, all over the place. People are going to be like desperate for dollars to try and get out of their debts. And there's just simply not going to be enough of them out there. The demand for them is going to go quite high. Asset prices are going to start to fall as, people are looking to get out of, like, certain toys and, liquidable positions in order to pay off those debts. So being in cash is the position you need to be to take advantage of something like that. Like blood in the streets. I think that's coming. High yield savings live on interest. Jerome Powell, short answer, yes. Okay. Recycle silver. Okay. Argentina is pretty smart to leverage. What if the U.S. decides to avoid those dollars through sanctions, maybe because of Falkland Islands? I don't know. Like, again, when you, what if, right? I don't know. Like, what if that does happen? They start forming partnerships with other people. It doesn't work out for them. Like, again, the sanctions, people had the idea it's going to kill the dollar, right? Which it does. There's obvious de-dollarization taking place and efforts to do it, and has been since 2015, before all this stuff went down, right? How many political parties ago, right? And so this is the point that I'm trying to get at, is that These things are economic forces that are already at play, right? And it's not working out. It's not working out for them. I mean, they're trying to get out of the dollar, but they can't, because the more funding that they needed, the best deals that they could get is to do it in dollars. And now trying to acquire the dollars to get out of the deal is very difficult for them. You know? Undox me. Hey, thanks, man. Love this guy. Right on. Well, I love you guys too, man. I love being here and I love doing this. All right. JPM has the biggest supply of silver and they are the biggest short positions. They do that to buy cheaply, right? Well, I would imagine, yeah, to keep the price of silver suppressed. And you know, there's like so much of it. I mean, I really enjoyed Chris Dewayne. Does you remember him? I don't know if he's still doing videos. I haven't watched for quite a while, but Chris Dewayne put out some really, really good videos talking about the absolute critical commodity of how critical of a commodity silver really is. Like how much our life depends on this one particular commodity. So much so that it's only second to oil. Like that's the only other commodity that beats out silver on its usefulness to our very existence, right? And so when we think about that from that kind of position, right, you think about every cell phone communication, everything that we have, we wouldn't be driving, eating, doing all the things that we're doing if it wasn't for the silver that we have, right? And so that makes it very, very, very unique, you know, as far as what it does for us. And then you think, okay, when it gets pulled out of the ground, right, 50% of it goes to industrial use, which means it's basically being consumed. And not as much of that is coming back out in recycling, right? So 50% of silver gets consumed, where most of gold gets stored. So like most of the gold gets pulled and they kind of know where it is, right? I mean, for the most part, not all of it, but a lot of it. But when it comes to silver, that's gotten pulled out, used, gone. So there's only really half of it available there for investment purposes. Now think about how unique it is. You see where we're going with this? So silver is a very unique metal. It's in like, I mean, you know, people hear me talk about like the Fed and say like, you know, oh man, this guy, he's just totally a, you know, whatever, a shill for the Fed and talks about it. I mean, I carry silver with me everywhere I go, right? I mean, this is a pretty cool piece right here. This is actually sterling silver, and it's the only piece I have that's weighed out in grains, right? So that's pretty cool. It's 1,000 grains. Here's a maple leaf, a Canadian maple leaf. You know? And these things I carry with me all the time. Like I have it with me. And it's not only just a reminder, but it's something that I truly believe in, you know, saving in silver and having it as an insurance policy. You know, it's really important to know and to have this, because it's outside of that risk of that third party. You know? But it is just a speculation, right? I mean, if you are intending on being rich on it, you're intending on selling it to somebody for a higher price. That's what your intentions are. But to me, it's an insurance policy. If the whole banking system collapses, I have something, right? I mean, it's not much, but it's something, you know? If there was a supply crunch, they would probably go long, then sell, then get their politicians to confiscate from the HOI polio. I don't know what that means. I make my own silver bars. It's bullion, not that safe possible. Considering bankers are international, that would be easy. Hey man, how many months of your mortgage you got paid in advance? Right now I only have a couple of months paid in advance. I had a little bit more than that at one point, but I actually used some of it to do other things, pay taxes and whatever. But right now I'm 2, and I'm hoping to be a 3rd here before too long. And that would be really awesome to be 3 months ahead. Actually, I'd love to be a year ahead. That would just be awesome. But right now it's 2, but I'm going to be 3 hopefully before too long. All right, I just wrenched on my 2007 Cobalt, supercharged, restoring to stock only, maybe with GM Stage 3 stock. Just my fun. Well, yeah. And, you know, like a lot of times, and that's cool, man, that you have something as a fun hobby like that to work on. You know, a lot of times people hear me talk bad about cars. Like, you know, if you want to be rich, you drive a POS. Don't dive into luxuries and don't buy new cars or something like that. And a lot of people kind of got upset with me. They were like, "Man, I really enjoy my car, man. This is like, you know, this is like my fun. This is my enjoyment." That's not what I'm talking about, right? I mean, if that's where you find your hobby, that's your passion, is to work on your car and trick it out and make it cool and go to the shows and do all that other stuff, man. That's cool. I mean, I don't have a problem with that at all. To me, that's not the same thing as diving into luxuries. Like diving into luxuries is driving it just so I could drive a Mercedes, right? That's what it would be, and have no other intentions other than to look cool driving my car or to feel like I have status by driving that car. I mean, I heard somebody say it the other day. I hope they're not watching and get offended by this, but they were talking about somebody else, right? And they said, "Oh, good. I was hoping that wasn't your boyfriend driving that ugly ass Civic," or something like that. Like I would think differently of you, or something like that. These two other people were talking, and I thought to myself, "What? You would think differently of some dude because he was driving some piece of shit car, right? All of a sudden, you don't have as much respect for him. Why? You don't think that he can pull it off? You don't think that he can do it? He can go out there and make things happen because he's driving an old car? I mean, what does that say about you?" Yeah, that's what I was thinking. I mean, I thought about that for a little bit, and I'm like, I laughed, and I'm like, that's me. I drive that old Civic, you know? So yeah, I guess you're saying that about me. You lost, you know, a little respect for me because I drive this old car and can be able to afford any car I want, you know? I don't have to look cool. I was really kind of offended by it. It kind of hurt my feelings, you know? All right. I have a ton of bars, rounds, and weird molds just pouring it. You know, I like the um, Monarch Precious Metals. They do some really cool, look like hand pours, and you know, just some unique pieces. And I really like the sugar skulls that they do. They're these 2 ounce Day of the Dead sugar skulls, and those are really cool. I buy them for gifts for people. Like that's like one of the gifts that I like to give out. T-bonds in my daily driver. Don't take financial advice from anyone with less than 500 mil. Damn right, man. I wouldn't take I mean, I wouldn't take financial advice from anybody. Like unless they're like a hardcore financial advisor who knew exactly what your life was like and needed and everything else, and they were good at it. Other than that, I would study the economy as best you can and hope that your intuition will know what the right will be the correct, and you'll know exactly what to do, right? Because nobody can pinpoint you. Like, you know, I've said it a million times. When you're out here, like I got the Columbia River right out here, and there is little boats all the way up to giant ships that go up and down this river. And when you're out there on the river, you can say, "Hey, we're out here doing the same thing." Yeah, you're all out there in a vessel trying to navigate the water, right? But the difference between somebody who's operating a 12-foot skiff, a little duck skiff out there, and somebody who's operating one of those freighters is much different. Like, I mean, weather conditions alone are going to make sure, are going to put the guy who's operating the duck skiff in much different conditions, you know, as far as the way they're going to operate and handle and deal with the river, as opposed to somebody who's operating the freighter, right? So, I mean, these two people are not doing the same things, even though they're in the exact same thing, doing, you know, the same environment, trying to operate their boats. But the way that they're handling the situation, what they're thinking about, the conditions in which that they need to react to are very, very different. And I think the economy is very much like that. So, you know, you can listen to people who have hundreds of millions of dollars and they can tell you all about how it is that you need to live your life in order to make hundreds of millions of dollars. But it's going to be a little bit more difficult for them to understand how it is that you live your life when you only earn $30,000 a year, right? They can tell you all the things you need to do, but they can't tell you how it is that you can, you know, make it off of $30,000 a year like you do, right? They have no clue how you do that, right? Think about that for a second. If they earn $30,000 a year, they would have no clue of how to do that. What do you need cash for? You nothing. Yeah, you can use cryptocurrencies. Unless you're shorting stocks, kind of hard to see stocks going to much higher. I don't know. I mean, let's see. Can stocks go much higher? Okay, de-dollarization continues to take hold. People are continuing to be scared of the dollars, but there's more dollars outside of the United States than there is in the United States. And in order for those people who have dollars outside of the United States to truly get out of the dollar, is to start buying into dollar denominated stuff like the real estate market and the stock market and to all these other positions in order to get out of the dollar and to take advantage of what it is that the dollar will do once the hyperinflation starts to take off. I don't know. I mean, you asked. I don't know. I just came up with something. Yep, I'm mostly in cash at the moment, and I'm still selling covered positions for the income. But yeah, cash is king in my opinion. It is for now. I mean, it is for now. It's not always going to be, but it's just like you got to think, okay, where's the runner up, right? And so like this was it. Like these guys, these were trying to be the runner up. This new development bank and the people like that. Like I'm sure this wasn't the only bank. There's other ones out there, and there's probably some that are doing quite well. But the fact that it's things like this that are happening where they had borrowed more in dollar denominated debt. 2/3 of their borrowing came in dollar denominated debt, and now they owe dollars to pay that back, and it's difficult for them, and they're going to fail doing it. Keep seeing all these 2021 2022 new trucks, heavy duty Cummins, and trucks being sold with 20,000 miles. Have you heard about the Iraqi dinar increasing in value? I mean, I've heard about that, and I've heard about other currencies that could possibly do it as well. I mean, a buddy of mine bought into a bunch of Iraqi dinar at one time. I don't know. Like to me, the whole currency forex trading and stuff like that. I mean, I think if you follow politics and you're into investing, then I think that would probably be a good position to go into, because you could probably really take advantage of some different moves going that way, especially if you can understand the political outcomes of some of these nations and what they plan on doing with it. But as far as like forex trading and trying to take advantage of something like that, I don't know. Like I don't know. To me, like that's an investment kind of thing that I really don't really I don't really look into it as far as how to take advantage of something like that. Like I think of more of like what a increase in the strength of a currency is going to do to the exports of that nation and how that's going to affect other nations. There's other people who will look at that information and say, how can I take advantage of that for income? And again, like that's not the way I kind of think about things. I started watching way back in 2020, I think. A few thousand subs, so good to see this channel blow up. Great way of explaining things. Well, thank you very much, Paul. And we're out here trying. Like every day we come out, we're trying to, come up with new videos, coming up with, more, things to share, Federal Reserve speeches, the breakdown of those things. We're trying to figure things out for the best of our advantage for us personally. Again, this is our boat that we're operating, All right, contributing to physical precious metals as well. All right, you all should see what has happened in Iraq the last couple of days. Yeah, I missed it. I don't know what's going on in Iraq. Invest in the mysterious Nigerian prince. Gold has utility too. Yeah, it does. I mean, but when it comes to the utility of silver over gold, I mean, as far as like, maybe the utility of working as a currency, as for trade or something like that, then I can see where gold might be, advantageous over silver, because silver is a little bit more volatile considering that it's more of an industrial metal, on 50% of the side of it. So, I could see that part of it for like a stability purpose, but other than that, it would be the same to me. Yeah. All right. Either you are gullible or a scammer. Respectfully, now choose. Oh, talking to Derek, I see. I don't know. Let's see, 1 grain, like a 26th of a gram, I think. Um, yeah, I guess. I don't know. I would say it feels like about 2 ounces or so. It's pretty cool. Check it out. Alright. Yeah. Alright, moving on. Why are paying months in advance on your mortgage paid direct to principal? Um, yeah, I know. People have asked me that one before, and it's because I want the freedom of being able to be nimble in the months ahead. Like, you know, a lot of people a lot of people look at me and they think, "Oh man, this dude's rich or something," right? Like you're on YouTube, you got all this clout on YouTube, and whatever. I'm really like not that. I don't really have that much money, right? Like I mean, I got some investments going, I got some stuff happening, I got a bit of a savings account going, but I really don't have that much money. So to me, like I still need a position in which that I need like emergency funds, right? Like to me, like I do have some emergency funds, but it would be nice if my emergency fund had like a position in which that I did not have to stress about like the mortgage payment, right? Now I could hold on to that money and say, here, I got my mortgage payment set aside, and I could be using that money to say like rolling over in the treasuries or something like that and gaining a little bit of an interest off of it. But the peace of mind that I have knowing that I don't have to make a payment until September, like that peace of mind, like I got all summer, like I don't have to worry about anything out there, right? As far as like, I mean, I have my monthly, utility payments or something like that, but that's pretty minimal. I mean, I don't have that much as far as my bills go. The biggest expense I have is that mortgage payment, and I'm gonna have to pay it anyway. So the 3.25 percentage that I have on my interest is really low. Right now, if it was higher and I planned on doing like a lot of principal payments going into the future, then yeah, I would definitely pay on the principal and, being able to take advantage of, not having to pay the interest on that money. But again, to me, like the peace of mind that I have being paid out months ahead it now has me thinking, okay, so I could either make the monthly payment this month, right? Or I don't have to. What if the stock market has a significant drop, right? I don't have to make I could take my monthly mortgage payment and make, and buy a bunch in the stock market, or buy a bunch of silver if it comes into a great deal, or whatever it is. That is being nimble, right? That is the ability to make decisions that normally most people wouldn't have if they have a budget on their mind, right? So it's like, oh, I can't do that because I got this monthly payment and all this other stuff. And if you make the principal payment, you don't have that anymore. Like it's gone, right? You made the investment, which is good. I mean, it's a good investment. Don't get me wrong. You save, a lot of money doing that, but it's not taking advantage of being nimble in that sense that you can position yourself in ways that you could take advantage of the situation in ways that you normally wouldn't be able to. That's what I'm trying to do, is to try and have that. I mean, what if I was paid out, say, a year ahead, and I didn't have to make payments for a whole year, and something came up where I could start a business, but I would need to contribute money to that business for 6 months to, or 8 months or whatever. Having the ability to do that is pretty cool, right? I mean, most people wouldn't be able to do something like that, to say, okay, I can ignore the mortgage payment for the next year because I've already paid it, right? And focus in on directing my money towards this thing. That's kind of the position that I'm looking for. I don't know if that makes sense to other people, but it makes sense to me. All right. I was never able to pay my mortgage in advance. What kind of scam is that? I tripled up on the principal and paid it off in 13 years. Yeah, and again, like I have the choice. I mean, I could pay the principal, and there might come a time when I'll get like 6 months ahead, and I'll start making principal payments instead of being 6 months out. But again, to me, this is like the emergency position that I'm trying to take. Yeah. Have you researched the current beef market from current consumption nationwide is down? Yeah, and I was thinking, man, if anything, looking at the beef prices, the live cattle, I would get out of cattle and get into pork. Get out of cattle and get into pork. I mean, that would be just from the things that I've seen or whatever. I know I'm not an investor. I don't know. That's not a financial advice. But just look at the charts. I mean, cattle's at its high and pork is at a low. You know, I mean, buy low, sell high. That's all right. Um, yeah, incognito, civic racer. Yeah, I mean, that's the thing about it. Like, driving an inconspicuous vehicle, being able to, like, I laugh at it when people are like, I see somebody that's sitting there and he's looking at the fender of his truck and he's all bummed out because he sees a scratch on it or something like that. And my car gets sideswiped and I don't hardly even care. Like, think about the difference inside of that. Like, I could have a brand new car and I would want it nice and safe in the garage where nobody would ever see it, because I wouldn't want anything to happen to it. And the only time I would ever drive it would be on Sundays. And so I'm thinking to myself, why pay all that money to do that? If I really, really, really want to drive a nice car, I'll just go rent one for the weekend and really enjoy it. And if it gets screwed up, I mean, whatever, buy the insurance on it or something like that. Like, I don't need a new car in my life, Not yet. I mean, there should be a someday where I'll drive the new Camaro. Well, maybe not because they're not going to make them anymore. So I knew a dude that bought a 2K7 Stang, dropped like 200,000 on it. He lives in the Tenderloin. I'm prob ready to eat a bullet. What? Oh, all right. Shallow people. Well, yeah, and it is like, I mean, I understand like an image, like to be able to put off an image, right? Like, I see a lot of people who do it in contracting, right? Like, if you have two guys, you're just looking at them and they're standing next to their trucks, right? And you got one guy who's kind of like, his hair's all messed up and his tools are kind of old and grungy and he's driving like a, you know, two-wheel drive beat up Toyota pickup, it's got a dent and primer on it or whatever. And you got a guy who's like labeled out, got his, got his gear on, like his jacket, his hat, his everything got his logo all over it. His tools are all brand new. Everything is perfect, right? And when you look at that, the image is like, this guy's got his stuff together, man. This is obviously a businessman who's got his stuff together. He knows what he's doing. Like, you can just see it, right? Or you don't even have to ask him anything, Well presented. The other guy, I mean, he looks like he's hungover. But me personally, I've seen this so many times where I would hire that guy who looks like he's a bum because I know his carpentry skills. I know how much better his carpentry skills are than the other guy. The other guy knows how to talk business, but this guy actually knows what he's doing. And so when it comes to hiring, I know which one I would hire, right? Because I actually know who they are. But if you were to just take their presence, and just look at them, then you would obviously go for the guy who's well put together, right? And that's the problem with everybody. It's all about appearance, right? And how you appear to other people. That first impression is everything. I mean, once people get to know you, then it's like they're blown away. They're like, oh man, I didn't know. It's so funny how many people, it's just like they come in to, like, they known me like my whole life practically, and they come in, they're like, dude, I didn't know you had a YouTube channel. That is incredible, man. It's huge. I just saw it. It's amazing. I'm like, yeah, it's pretty cool, isn't it, man? I don't, like, hardly anybody here really even knows that I even have a YouTube channel in my hometown. I mean, a lot of people do, especially the people who I work with and stuff. They all know about it, but like, I don't walk down the street and people are like, oh, there's that YouTuber or something like that. It isn't like that at all, Did I get another super chat down there? Yes, I did. Thank you so much, Super Duty OHV, for the $4.99. Powell in the FOMC meeting this week signaled the Fed is serious about a 2% inflation target. Assets will drop and plan is coming. Buying ops for metals. Yeah. I I still am curious on how long it is that the Federal Reserve is intending on keeping the interest rates elevated. Because for me, it's not about a 2% target, it's about a 2% average inflation rate over time. And we don't know what that means. That's the problem with the Fed's new target, right? Because it used to be a 2% target. We knew it. It was just like, okay, once it has hit that spot, right? But now it's more about, hey, we have reached our, how do they even say it? In line with our, with, God, I forget exactly. They have a term on how they say it. I can't remember exactly what it was, but it doesn't say like, in line with our target rate. I mean, they do say target rate, but they have a particular wording for it. So it's kind of vague, in which that they say. So basically they're saying, hey, once we realize that, we're in line with our target, then we'll start to adjust rates. But it's that average inflation rate over time that they're shooting for, and we don't know exactly what that means. So, all right. You must not have Chase for a mortgage holder. They don't allow you to pay ahead and then skip the next payment. No, I don't. I can't remember. I do remember the name of it. It's like Citizens or something like that. But I don't know who. They're just the mortgage servicer, and I'm not sure who it is that actually owns the debt. But it was funny because right after I bought it, other people have talked about this too, but immediately, like, the debt got sold a couple of times. It was weird. Like, I got these letters saying, hey, these people own your debt. These people own your debt. Yeah. All right. I like your show, no shade, but you're looking like Steve from Blue's Clues. Cool. I don't know who that is. Gold does not corrode. You're right about that. Cattle prices will go up due to the drought. Yeah, I can believe. I mean, I can believe how that would cause the drought. Especially since, like, what was it? They had the drought. They had a hard time, like, keeping water to their cattle, like actually just hydrating them. And so they ended up like sending a bunch of them. Like even the dairy cows, same thing. Like they were sending those ones off to slaughter as well. All right. It's because most people are vain. Yeah. All right. Greetings from Salem. Hey, right on, Dave. Well, thank you for being here. Oh, dang. Sorry to hear that. What happened? All right. The smartest guy is already retired. All right. I heard stories about neighbors and beat a car, yet they saved money and traveled the world. Yeah. I mean, well, that's just the thing. Like, I mean, most people live paycheck to paycheck, right? I mean, that's like the majority. I mean, almost everybody lives paycheck to paycheck. They increase their standard of living until they, to meet their capabilities of what they earn. And then you can't handle any kind of consequences that happen. Like, you get hit with medical bill, or you get hit with, like, a job loss, or something happens in which that, now you can't come up with this extra money. And knowing how difficult it is, especially when you are broke, poor, and then having a hard time getting money to come in. Once you start earning some better money, once you have gotten out of debt or some of the bad debts that you're in, it's easy to increase your standard of living. It's difficult to keep it suppressed, right? Not buying a new car. That has been a big deal for me. I have really, especially when I was walking, I dreamed of having a new vehicle. Something that was reliable, something that it felt good to be in, something that I was just like, proud to own or something. The closer I got to it, the less I wanted it. The time that I finally got to the point where I could get it, I didn't want it. Like, I didn't want it. Like, having the ability to get the vehicle is the same as having it. It's a weird feeling. Like, if you don't have the ability to do it, then you so want it, right? It's like something like being deprived the ability to not get it is the feeling of loss or something that has you wanting to do it, right? But the moment that you have the ability to do it, you don't really care anymore, because you can do it anytime you want. So now that want is gone. Like, it's not a want anymore. Because this is the problem with wants. Wants are needs, and needs are negative energy, right? So when you have this need for this vehicle or something like that, that's a negative thing that's on you. And it's one of the reasons why you don't end up getting one, is because you have this negative energy feeling towards it. The moment that you don't want it anymore, you don't care about it, then it's easy to get, right? The thing is just like it almost practically is handed to you. Here, go out and get one, And it's like, no, I don't want it. I want investments now. I want to get ahead of my mortgages. I want to do all that other, or whatever, mortgage. So, what's your opinion on spending $35,000 a year old, 3-year-old F-150 with over 60,000 miles on it? Hey, man, I don't know. Is that a good deal? I mean, I don't know. I spent $1,700 on 2 vehicles over the course of the last, 4 or 5 years. Maybe put another $600 or so into maintenance into it. I mean, my cost of traveling is really low. To me, $35,000 is a lot of money. It's a lot of money, and I would think $35,000 would be so much better in dividend-paying stocks or into something else, like, other than a vehicle. But if you need the vehicle, then, and you need it to work, or you need it to, for whatever reasons, then, I guess that's your need. But I don't need that kind of vehicle, and I don't need to spend $35,000 on it. I need to spend $35,000 on investments, whatever they should be. When you going to do a coffee meetup in Astoria? I don't know. I was talking with, you guys remember Tony Lopes? I don't know if you know Tony Lopes. He attends the Rebel Capitalist events and stuff. What did he recently wrote a book? What was it? I can't believe I can't remember his book right offhand. But anyway, him and I had been talking about doing doing my own meetup, not my own meetup, but my own conference here in the Pacific Northwest, doing a Rebel Capitalist type of event and bring in the big speakers and stuff like that, or invite them to do it. And that seems like, I have no idea what I'm doing when it comes to an event like that, but I would love to try and put on something of such nature. But really, I think what I need to do first is to try and do some smaller events to try and just get a feel for what that experience would be like before I try and take on something of such magnitude. And so I want to start with some smaller meetups, maybe the coffee events or something like that, but then maybe even rent I don't know, maybe a small conference area or something like that, and throw on a little, I don't know, an event or some sort, and just kind of see how it goes from there. But as far as a real coffee meetup, I don't know. Let's see. I'm busy next weekend, so I don't know. Let's plan it for a month from now, and we'll see. We'll talk about it a little bit and see if maybe we can find a place that we can have a coffee meetup and talk economics for a few hours. All right, beater with the heater. I own the car don't own me. That's it too, Powell says overtime every single time. That's it, overtime. Until we reach our 2% target overtime. I don't know. It's overtime. Average inflation expectations. Yeah. All right, I agree. It's dumb. A friend of mine is in the process right now, and I've been trying to talk to him out of it. I don't know what you guys are talking about. Okay, hit the like button. Yes, please do. Hit that like button. All right, Band-Aid. Let's see. Bet nobody liked Janet Smellin. All right. I lived in the Hamptons, New York years ago. Each town has a different personality. What is that? Amagansett? I don't know what that is. Folks drive old station wagons, yet have millions, similar to New England. Thrift mentality. I like buying new cars mostly because I know how well I can maintain it myself. A lot of the time with new cars, some mechanical detail was not maintained. Yeah, and now again, if you can, if you, I mean, if you have a brand new car and you really enjoy, driving, your new BMW or whatever, and you trade it in every 2 years for a new BMW, and you can totally afford new BMWs, and it's not like a burden on your life or anything like that, drive new BMWs, right? I mean, that's not the, like, I'm talking about myself in the position that I'm in. I should not be driving a new BMW. I should be driving this thing, and then using the money that I could buy a BMW with and invest it until that investment can buy me a BMW. She cuts her own hair in the mirror with a Flowbee. Huh. Oh, you're talking about yelling? All right. My mortgage was sold over 3 times. I didn't have a choice. No, I don't think you really do have a choice and stuff like that. Getting kind of a glare on the phone here. Let's see if I can position myself. There we go. All right. Do you have much stock? No, I don't. I have pretty much most of the stock that I have. I mean, I have, I don't know, $1,000 or whatever in some mining shares, but most of what I have is in Altria. Um, Total Stock Market ETF, the Vanguard Total Stock Market ETF, the Vanguard Russell 1000 Growth Stock ETF, and Coinbase. And those are like the 4 positions that I have been putting into a stock portfolio that I started on Cash App as an experiment with Bitcoin as well, because I'd buy $50 worth of Bitcoin and then $50 worth of the stock portfolio, whatever stock happened to be, the one that I felt like was good to choose for that week. And I bought $50 a week for a year, right? Both in Bitcoin and the stock portfolio. And the Bitcoin portfolio did quite well. And I should have sold out when the experiment was over, because I had done it for almost exactly a year, and the Bitcoin had done quite well. But I held on to it, and then the Bitcoin fell under like how much I paid. Like, I've still added more to it, but I'm probably about, I don't know, $600 down on the Bitcoin side, and I'm about $75 down on the stock portfolio side. So I'm under on both of them. But again, like, I've had these two going for well over a year now, almost 2 years now, over 2 years. So anyway, I don't know. That's what I'm doing with it, and I feel good about it anyway. Let me see. There's some more super chats down here. Yes, there was. Zulu, thank you so much for the $2. Nice chain, bro. I'd be down for coffee. Well, very cool. Yeah, thanks, man. I've been wearing this chain for like, I don't know, 15, 16 years. And what's funny is, like, I got this thing when I was first getting into silver, buying silver, and this dude I knew, was, I don't know, he was into some shifty stuff. But anyway, he came over with a bunch of things for me to buy, and this chain happened to be in it. And I'm like, dude, I'll give you weight value for the chain. He's like, sold. So I ended up buying it for like, I don't know, $36 or something at the time. So, yeah. All right. If you can't make it on $40 hours, you need better paying job or spend less. Yeah, like, and it's not really a matter of how much you get paid, it's how much you can save. And that's the problem that most people find, is that they can't really save any money, because really, if you want to enjoy things, you have to really kind of spend your money to enjoy it. And most people aren't really, like, willing to necessarily, like, go in and find the things that are enjoyable in life that are free. Right, that's the problem. Is like, you have money, you want to kind of go out to the bar and hang out with your friends, or go to concerts, or go and buy toys, or do something like that. It's very difficult to just say, I'm going to go and enjoy the most free things in life, and then experience those things as if it was the first time I've ever experienced those, and live life like that. Right? Most people can't do it. They need, like, some sort of stimulus, like, whether it's through drugs or some kind of outside, entertainment or something like that. They can't handle just going out and just, experiencing the world and enjoying it. And I know, because I was one of those people. Yeah? And then I'm trying not to be one of those people, All right. That dude over there, O2, thank you very much for the 5 Canadian, man. Very cool of you. Hey, Simon, I just wanted to say hi from BC. Well, thank you. Hi back. Shout out to Charlie. Okay. Buy a Camaro, drop the clutch, burn some rubber. Love you, UE. Dude, I so bad. I so want to, man. I do. Like, I want to drive the Camaro around. I would love to be doing videos inside the Camaro and say, dude, guys, I finally got to the position in which I feel it. Man, I went and got it, right? I would love to be there, but I'm not there yet. I'm going to get there someday, and you'll see. Port Bear, thank you for the $9.99, man. Supporting what I like. Thanks for all you do. Bear Terria? Very cool. I like it, man. Hi, Simon. Greetings from Moscow. Right on, Anna. Is that Moscow, Idaho? Last Bitcoin purchase I made was when I was just under 10 per BTC. I sold part of one after the 2022 high when it was around 44K BTC. I paid off my mortgage with it. Yeah, and see, now that's like, that would be something that would be really awesome, is like to have like a Bitcoin portfolio like that. Like I have, like, some at Coinbase, I have some at Cash App or something like that. To be able to have something like that all of a sudden just provide me with all the ability to pay off my mortgage or all that other stuff, that would be so rad to have happen. But if it doesn't, that's cool. Like, I'm not anticipating it, and I'm not, going to sit around and wish and dream for something like that to happen. But if it does, cool, my goal is to get one Bitcoin. Like, I want to have, once I have achieved the ownership of one equivalent Bitcoin, then I don't know if I'll be buying any more after that. Like, I mean, I might continue, but that's kind of like my goal, is just to acquire one. And then once I have that one, I don't know, I might go into like maybe altcoins or do something else, or maybe just continue buying Bitcoin. Anyway, looks like a good time to accumulate Altria. I don't know. I mean, I'm not an investing kind of guy, but I bought a bunch more just recently, and I've bought that, and I've bought in Coinbase just recently. So I'm taking in more positions on both of those. Again, I don't know if that's the right thing to do or not, but I wanted to get more, dividend paying stocks, and I believe Coinbase is going to pull through as far as like these SEC, filings and issues and fines and stuff that's going on with it all. Like, they keep saying they're going to shut Coinbase down. I don't believe that. I think Coinbase is going to be the leader at the end of all this. Whether they're, I don't know necessarily the leader, but I think they're going to be in the pack of leaders, of people who are handling the transactions of cryptocurrencies, not only on a commerce, like, just regular daily commerce, but all the way up to banking transactions and stuff like that. I think Coinbase is going to be involved. So, all right. Being from Long Island, New York originally, I always had to pay 3/4 towards my rent. The last quarter was car insurance and then oatmeal. I never lived decently until now. I live in reduced rent senior citizens housing. Yeah, Carol, that sucks. But that's, again, that's the position in which that we found ourselves right now. I talk to a lot of people who are like, man, my job doesn't pay. Well, no, I know my job didn't pay either. That's why I went and found YouTube. That's why I went and did bingo. That's why I went and mowed lawns. That's why I went and did a bunch of side hustle and stuff, because my job never paid, ever. Not a single job that I ever had, which was like my daily income, my day job, never did it ever pay enough to live off of. Like, I was always broke, always like trying to figure out how to make ends meet, always suffering like that. It wasn't until I had side hustles, right? Side hustles is what gave me the money that I was able to do things with, pay off debts, and actually go and buy beer with and stuff like that when I was still drinking. But that's how it ends up going. You can't just have the rule of like, you need a $40 or a 40-hour work job that pays the bills. Like, who made up this rule? I don't understand this. Like, somebody made up this, like, this is the way it should be, and then you got to live that way. I don't understand this. This is not like, I don't understand who made up this rule, why it is that people live by it, why it is that they say their day job doesn't pay the bills. It's because, I mean, it never has. Like, I don't understand this whole concept that people have about it. I mean, I understand that it should. Like, people feel that it should pay, like 40 hours of work should pay, make the living. But that's not the way it is. I mean, it sucks, right? I mean, if you want a decent living, you got to work a lot. I mean, not everybody. Some people have really figured it out where they hardly have to work at all. I'm not one of those people. I'm one of the type of people who works a lot to try and figure out how to make more income so that I can have the things that I need to provide for my family. That way you're not eating oatmeal all the time. You know, I mean, I could drive a BMW and eat oatmeal, but I drive the S10 and I eat oatmeal with, I don't know, fancy mangoes in it or something. I don't know. I don't eat fancy mangoes. I like mangoes, but I don't know what a fancy mango would even be. All right. Economy isn't moving and it hasn't, so why? Well, it's because of the slowdown in the purchasing power coming from the consumer out there. The economy is slowing down, I mean, in all fashions from everywhere. I mean, just look at the manufacturing coming out of China. That is dramatically slowed down. And we knew this was going to happen. I mean, we talked about this quite a bit. When the Federal Reserve says, okay, we're going to raise interest rate and try to hurt the consumer, right? They didn't say it just like that, but they essentially said that, hey, we're going to raise interest rates and hurt the consumer. At that point, that's when, like, the supply chain from every direction, the distribution network, the manufacturing, all the retail, all those people are like, oh, that's it, we're done, we're out, right? We're not participating in this game. We're not going to put our investment towards something that we're going to get hurt by, right? And that's exactly what we're seeing taking place. When the statements came out that this was going to happen, I'm thinking you're trying to keep the supply chain broken. You're trying to keep it broken, right? And keep the interest rates elevated. And it's raising the neutral interest rate. And that's ultimately what the whole intention of everything was. Like, if there was a pandemic, if there was an orchestrated event coming from the central banks around the world, it was to raise the neutral interest rate, right? That rate in which that the economy is neither restricted nor accommodated, right? That interest rate was too low. It was near zero. And stimulating the economy with lowering of interest rates, with monetary easing and stuff like that, was no longer an effective tool. It wasn't going to work anymore because of that low neutral interest rate. So they had to raise that up, and that's what they're doing right now. And if they can keep the supply chain broken, and they can keep the inflation running rampant, and they can keep the idea that it's going to be sticky forever, then they can keep the interest rates elevated, and they can continue to raise that neutral interest rate, which is what I believe that they are truly trying to do. And they got it. Like, they're totally effective at it. So again, that's really difficult to try and explain out, but anyhow, that's what's happening. My grandpa always told me, it doesn't matter what you make, it matters what you save. It is. He died last. Oh, I'm sorry, poor bear. I mean, sorry to hear that, man. New glasses since I watched last. Yeah, I can't really read the comments anymore. I mean, I can read them. It says, I don't think BRICS will issue anything better than US. So it's really difficult to read that. All right. Than the USD. I live in both Russia and China, and even the RMB internationalization seems to be a joke, not to mention RUB or the rupee. Yeah, and see, now this is Anna. No, you do live in Russia. Okay, not just Moscow. So yeah, and that's the thing that I felt like. That's the reason why I never fell or not falling for the de-dollarization, or that the dollar is going to lose that world reserve currency status. There's nothing there to replace it. There's no backup. There's no, like, second place runner up. It's just not there. And so without anything to replace it, and gold being, like, too cumbersome to actually fill the role, what are they going to do? There's nothing that can be done. It's just going to have to continue on until that runner-up does present itself. And these guys, the BRICS nations, it's not working out too well for them. I mean, we just learned that from the articles that we were just reading. You can see how, the moment that the dollar weakens comparatively to a nation's currency, especially an exporting nation's currency, they start to weaken their currency right away. They start buying up dollars, right? It's like, oh, no, you don't, right? You're not going to cause our currency to strengthen and ruin our exports. All right. Might want to move some of that BTC to a hard wallet. Yeah, I do have a separate. I don't have it on a hard wallet. Like, well, I do have. I guess I do kind of have it on a hard wallet. Anyhow, um, I have it at Coinbase, and then I have some at on a on different wallets. What else do I have it at? Cash App. I have some at PayPal. I have some at Venmo. Not very much, just little bits here and there. Hey, thank you very much, Happy Bear, for the 420. Hey, UE, quick question. What is it? Oh, here we go. What do you think about the ancient astronaut theory that claims that the Anunnaki were aliens who got early humans to mine gold for them to repair their planet's atmosphere? I love that story. That is so much fun. I don't know how much information or videos there are out there on it, but I watched one kind of long presentation about that, and I love the theory behind it. It's very fun and very clever in the way that it was all put together, and in a lot of ways it's also kind of compelling, to hear some of the information that they come out with. It's just like, holy man, did aliens from another planet come down and put us here to harvest things, or get us to harvest the gold? It's a very interesting story to kind of follow, but I kind of just look at it as that is entertaining imagination. That's so bogus, not paying enough to ask a long enough question. All right. Let's see here. Damn, bro, I feel for you. Let's see. Okay, can you explain the price and yield of bonds? Is yield the interest, and if so, why is it called yield? Okay, that is a very good question, because a lot of people are really confused by the bond market and why it's so important. Like, if you don't understand a bond and how they operate and the difference between yield and price, and then coupon rate, because these are three different things that are part of the bond. If you don't understand all these things, then it makes it very difficult to understand what's happening in the world, especially when it comes to the sovereign debt crisis that a lot of these countries are going to experience, because they have issued out bonds denominated in dollars. All right, these are foreign nations that don't have anything to do with the United States. So let's talk about what a bond is, and then how they operate, and why the yield is different from the coupon, and then what the price is comparatively to the yield. Because really, there's a face value. There's a bunch of parts to a bond. There's even the face value, which is the fourth part. All right. So let's here, let me grab a piece of paper here. Let's do it like this, and let's see if we can kind of explain it a little bit better. All right, so here I got this bond, right? And we're just going to imagine, I don't have my pen. Where's my pen? Do I have a pen in here? Yes, I do. Okay. So we got a bond. This is our bond. It's a $100 bond, right? $100 face value bond. And now this bond can be sold. What this bond will do, it's a loan. So when I sell this bond, basically I get, whatever I'm choosing to sell it for. We're just going to say $100 that it sells for, right? I get the $100, you get the bond. Now, why would you want the bond, right? Because the bond's going to pay you an interest rate. Now, we're going to say for 10 years, this bond's going to pay you an interest rate of 10%, right? And so down at the very bottom of this bond, what you're going to find is going to be 10 coupons, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Cool. 10 coupons. And each one of these coupons is going to pay 10%, right? So if you can imagine down here, all these little coupons, right? Each one of them is going to pay 10%. So once a year, what can happen is if you're the owner of this bond, right? You can tear one of these little coupons off and bring it in and get your interest rate off of it, which we're going to say is $10 off of this $100 face value bond. So the 10% coupon, right, is the coupon rate, right? So $100 face value, 10% coupon rate on that $100 face value bond. Now, this bond doesn't have to sell for $100. Like, I own it, and I'd be like, wow, man, I got this bond. I just bought it, and it has these 10% coupon rate to it. It'll yield me 10%, right? Because I bought it for $100. So if I hold on to this thing for the duration of the maturity of the bond, which will be 10 years, after 10 years, I will have collected my 10% interest coupons, right? And I'll be able to cash the bond in for the face value of $100. Right? So cost me $100, has a 10% return to it. That's a 10% yield. Now, if I sold this bond, right, to another investor for a higher price, like I paid $100 for it, but what if I sell it for more than that? I sell for $110 to the investor. Now that investor paid $110 for it, right? It's nothing changed about this bond, right? Still has a 10% coupon, still has a $100 face value. Take a look at the trolley. So nothing's changed about the bond, right? It still has the $100 face value, still has the 10% coupon. The new investor who has purchased the bond, nothing's changed for him as far as what this bond's going to do for him. It's still going to pay him a 10% interest, and at the end of it, he'll still be able to cash it in for a $100 face value. Now the difference is how much that investor is going to yield from that bond comparatively to what the first investor had. Okay, now this is this is where it gets difficult, because this is why the yield is different. So what this bond ends up selling for is a higher price. The yield that the investor gets at the end of the duration of the bond will have fallen to like 9%, right? What the investor intends on getting at the maturity of the bond. He originally purchased it for 110. He gets his 10% coupons plus the face value back, right? But because he paid $110 for it, the interest that he actually receives at the end of the maturity of the bond is less than the original investor who had purchased the bond at $100 face value. You see what happens there? So the higher that bond goes up in price, right, the lower the yield goes. So you can eventually get to a point where you pay $200 for this bond, right? And if you held on to it for maturity, right, you'll cash in all the interest, all the coupons, all the interest-bearing coupons, get your $100 worth of coupon payments, the $100 face value, you pay $200 for it, it yields zero, absolutely nothing, right? That's a zero interest bond. Now, let's say you pay $210 for it, and you held on to it to maturity. Now the same bond, right, is still the same, $100 face value, 10% coupons, nothing's changed about this, has just gone negative, and now it's a negative bond. Right? Because by the time if you were to purchase it for $210, by the time you cash in all your coupons and get the face value back for the bond, you will have a negative interest rate because you will not get back as much money as you have paid for the bond. Does it make sense? No, of course not, right? The idea of that taking place does not make sense intuitively, right? But now what does make sense is that if you bought this negative bearing bond for $210, with the anticipation that the central banking system out there is going to be continued to buy these negative interest bonds, you can sell it for $220 or $230. You see, you sell it even deeper into negative territory. So you're speculating on the idea that you will be able to sell this bond for a profit going into the future, causing the negative interest rates to go even deeper onto it. Okay? Again, very difficult to wrap your heads around. Nothing changed about this bond. Right? It's still the exact same bond. Nothing has changed about it. $100 face value, 10% coupons. But the price that the investor is willing to pay for it will adjust the yield that they will receive. Right? The higher price they pay for it, the lower the yield goes. The more the price goes up, the lower the yield. Right? The price falls on the bond, the higher the yield goes. Let's say you pay $90 for it. Right? Not only are you going to get your 10% coupons, right, for all of it, but then you get $100 in face value. Right? So now you've actually gone above the coupon rate. You're actually earning, whatever, 10, 11%, 12%, whatever it is, right? You get a 12% yield. It's more than the coupon because of the price you paid for it is lower. And so now when you have corporations or countries who are at risk of default, people are like, man, I don't want this bond. Get it out of here, right? I mean, these people are about ready to default on their loans. Well, if that's the case, then the price of that bond can drop dramatically low to pennies on the dollar. Right? And this is where the risk of default is starting to take place. Well, a lot of times when you have corporations like Evergrande, remember the Chinese corporation whose bond prices were falling dramatically, then the government comes in there and starts buying up some of these bonds to try and support them, right? Trying to keep these bond prices from falling any further. And that's really where a lot of the manipulation and schemes start to come in. All right, does that help? Did that help? All right. Hey, Aaron. Let me get back down here. All right. Good Lord, Simon, you ramble. Yeah, I do. All right. Now I know. Okay. Great suggestion, Aaron. Yui, would you likely pick up new subs? What is he talking about? Let me get back up there. Aaron, well, maybe. You should make this explanation a short. Oh, okay. Yeah. Love is rambling. Thank you. Yeah, yes, super helpful. All right. Every time I hear default, I start seeing flobies. Great suggestion, Iran. Yeah. All right. Well, yeah. I'll see where it is. I mean, did I do that in a minute? That was kind of like a long kind of rambling on it, but yeah, because once you understand the bond market, man, everything starts to make so much more sense. Like, think about it. Like, this is the asset that people hold, like the central banks and the corporations and everybody holds around the world to do world trade with. So the US treasuries, the bonds coming from the government, they don't use, like most people don't use dollars, they use the bonds to facilitate the trade because they get these interest, get the coupon rates off of it. So that's what most people, when they do transactions, they end up facilitating the trades using treasuries. And that's why there's a demand for the safe and liquid asset of the US treasuries. And so anyway, yeah. Uh-oh, he's getting started again. No, I'm not. All right. How's economy in your area? Keep hearing about recessions, and yet stock market keeps skyrocketing. I mean, the economy in my area is different because we have really transitioned from like, what can I say? Like, I mean, we're still working class here, but not like it once was. I mean, this used to be a logging fishing community, and now it kind of transitioned through a tourist kind of thing into more of a retirement kind of community. And I think the medical district here really kind of says a lot about that. Like the hospitals and medical and treatment centers and everything that's in Astoria now is just exploded. It's like way more than what this town really needs, but it's for a bigger area of the Pacific Northwest here. But it seems to me like it's geared up for that retirement community kind of position. I don't know, like lots of nice cars, lots of nice homes, lots of like new conveniences and stuff that typically wasn't here. Trendy things, things that are trendy are starting to really show up here. Used to be full of dive bars. Like, Astoria used to be like kind of a dumpy little town, with dive bars. And now, like, there's a few dive bars, the local places, but most of them are turning into trendy little hangouts that people go to. All right, moving on. Paradox of money. Save it, you have security and peace. You have to spend it to enjoy it, then you have no security. Are you married and have kids? If so, how do you balance it all? It's difficult, yeah? Yeah, it's difficult. I'm married with kids, yeah. And you can't always, there's some stuff that slips through. Like there's projects and there's some business things that I should be working on that would take a little bit more of my time. I mean, there's things that I should really be doing to advance the Uneducated Economist and really growing like the business part of it, like doing those conventions or those speaking engagements or something like that. Try to get this information out in presentations that are more informative with like I guess like, information actually brought in from the sources and stuff like that that I could share, and like, however that is done. Like these are the type of things that I really should be doing, but it's difficult because I carry like, I do the full-time job, I do the YouTube, I do a side hustle, and then I'm trying to do other things on the side of that, right? To try and try and incorporate other things into it. It doesn't leave you with much time, so you don't really balance it all. They say you got to, balance things. You can't. Like if you're going to balance things, that means you have to deprive some stuff out there. And at times, like you either have to really go for it, you focus in, and you really hammer down, and you try and get a bunch of stuff done. And then other times you just back away from things and you say, okay, like right now, I'm not gonna mess around with any of those things. I'm gonna, pay a little bit more attention to, these personal things I got going on, and kind of back away from that stuff for a little bit. But I just don't see how you can balance. Like either you're driving for it and making it happen, or you're not. Right? I mean, those are the two positions you're doing. You're either going for it or you're not. All right. Do it. Seriously. Everybody I work with is college educated, but I bet 4 out of 5 of them do not know that. What are you talking about, bro? All right. Should I be holding USD even though it isn't my currency? I mean, I don't know. Like, you're up in Russia. I mean, I would. I mean, I personally would be, but I don't know how your government's going to handle, you holding U.S. dollars. Are they going to, put some kind of law against it or whatever? I would be, a little nervous of that. But as far as me personally, I have absolutely no problems. Like if I lived, like in Argentina, like, yeah, I wouldn't be messing around with anything other than dollars. All right. Robert Shield Jr., thank you very much for the $1.99. Is there one asset not subject to value manipulation? Is there one asset not subject to a value manipulation? I don't know. I mean, I guess not. Like, I mean, I think everything, as long as it's, somehow got a derivative or part of the banking system, even like Bitcoin or gold or any of that stuff, I mean, it all has some sort of manipulation ability to it. So long as you have like the off ramps of exchanges and, those point of weaknesses like that. If Bitcoin didn't have anything going on with like the banking system, as far as like, didn't have any of the ETFs or anything like that, and it was completely black market, then I would say that might not be able to be manipulated. Don't forget yourself. Yeah. Thank you, John Velasquez, for the $1.99, man. Noticed you wearing glasses more. Me too. Yeah, I can't read the comments really without them anymore. All right, you don't have to have capital punishment in Russia anymore. Is that it? Are we down to the last comments now? Wow, how long have we been on here? Hour and 51 minutes. Cool. What time is it? 1:48. Right on. Well, is there any other questions, or should we call it a day here, guys? It's been out here for a couple of hours, and I don't know. I got the patio to go work on the patio blocks I was going to go set. That'll be fun. And it was cool talking about all the banking systems and how it is that the BRICS nations are going to handle trying to get out of the dollar when they are so dollar dependent themselves. It's a very interesting thing to try and consider as far as how we move into the future on a lot of this stuff. I think about like, how long would it take to actually get out of the dollar, and or like as far as like a global de-dollarization and what that would really take as far as timeline goes. And really it was generations that it took to get into it. It'd probably take decades to get out, to unwind that entire mess. I can imagine though that once it does reach a tipping point, it would probably happen pretty fast after that. But again, like it is such a far out reach right now that I just can't imagine it being anywhere near the possibilities in like say the next year or two. All right. Happy Father's Day, Simon. Well, thank you very much, Virgo Blue. I appreciate it. If you had a fairly new vehicle, 2017-20, worth 30 to 40, fully paid off, you don't think it would be more worth it to keep it until the wheels fell off, or sell it, get a beater, and invest the rest? Well, if it was completely paid off, if it's completely paid off and it's running good and you don't have a bunch of maintenance issues with it, then there's no point in getting into the beater, right? I mean, the beater is to save money from purchasing a car. If you have already purchased it, then it's, I mean, you've already committed to it. And so I would say hold on to it till the wheels fell off personally. But, if you could, say swap that for a newer, better running vehicle, one that's more fuel economy or something like that, maybe cheaper insurance, and save money that way, then it might make sense to get out of that vehicle and get into another one, Let's see here. Can copper price not be manipulated? No, I would imagine copper prices can be manipulated. I think anything really that has a, I believe that anything that has any kind of ability to be traded on the stock market through say the COMEX or something like that, I think it has the opportunity to be manipulated. Things that really don't have a chance to be manipulated is things like marijuana, right? Marijuana, that's one that can't really be manipulated. Like, weed is expensive if it's illegal. That's the manipulation inside of it. The moment that it's not illegal anymore, weed is worthless. It is absolutely worthless, and it doesn't have any value to it. I mean, literally, there is no real value that goes onto it unless you're talking medical. Then there's some powerful medicine that can come from marijuana. But for the most part, most people are using it just to get high, and there's no value inside of that. And that's why it's pretty much dirt cheap and anywhere that they make it legal and legal to grow. It doesn't have any kind of special skills or talent that is needed to grow weed. I mean, it does take skill and talent to grow good quantities of quality weed, but just about anybody can throw some seeds in the ground and grow some pot, right? So again, things that have almost no value to it and are in demand, like marijuana is, you can see where the prices go, right? They're very stable at a very low price. And so to me, that's not manipulation. There's no manipulation taking place within the marijuana industry. None. Right? Unless you put on some laws, when it comes to the dispensary. And if you make it tough there, it'll go right to the black market. Right? And the black market will set its own prices, which they do. Enjoy your day. Are you out of here? Anissa, is it? Thank you very much for being here. I really appreciate it. What happened to the Fed now? It'll happen. The Fed now, I still think is taking place, isn't it? Isn't it being implemented here at the end of the month or beginning of next month or something? And there's going to be transactions. There's going to be the start of the crypto, the central bank digital currency. It's going to start, right? And I mean, there is no denying it. There is no way that it's not going to happen. It's kind of there's too much talk about it. There's too much papers written. There's too many speeches. There's too much going on with the idea of a central bank digital currency to deny the fact that it's going to happen. It's going to be there. You can try your best to deny the use of it, saying, I'm not going to participate in that system whatsoever. But if you have a bank account, I think you're going to have no other choice, right? And as far as pulling cash out of the system, I think it's going to be very easy for them to do, especially when you consider that most of the younger generation doesn't even really want to use cash anyway, right? So if you give it a generation of central bank digital currency use within the banking system and accounts and stuff like that, and then you get a generation to go by, it's going to be very easy to implement it into this a full-on use, because most people are just going to hand the cash over anyway, especially if they make it a burden to use. All right, Brandon, thank you so much for the $4.99. Love your channel. Doing a bathroom remodel with a friend of mine, with a friend Max, trying to convince him de-dollarization is not around the corner. Hey Max, I mean, it's to think that it's not happening would be delusion, right? So it's definitely happening. I mean, Max is not wrong for believing that it's occurring, because there is evidence out there everywhere of it happening. What we have to try and take on to the understanding is to what extent is it really taking place, and what is it going to really look like to get out of the dollar. These are the questions that we really have to ask ourselves, because we can watch the videos out there of people showing all the evidence of the transactions that are taking place. Like, you can say, look, here's France doing deals with China in yuan. Here's Argentina setting it up. Here's Egypt setting up. Here's Russia setting it up. Here's all these things. You can go over and just make a list of it, going on and on and on and on and on and on about it, right? But think about what demand for the dollar there really is, and what demand for the U.S. treasuries there really are. Here's another thing. Here's another story you hear, all right, as far as the de-dollarization. Everybody's getting out of the U.S. treasuries, right? They no longer want to hold on to the U.S. treasuries, because if you're holding on to U.S. treasuries, you might as well be holding on to dollars. And we're getting out of the dollar, right? There's the de-dollarization taking place. Go and look at the link that I leave down in the description to the Federal Reserve Fred chart showing foreign holdings of U.S. treasuries. Over the last year, if you bring up the last year chart, you're going to see a dramatic drop in the amount of U.S. treasuries being held by foreign holders, right? Whether it's countries or foreign, it is outside of the United States, right? Now, take that same chart from a year and take it out like 10 years. And you're going to see that right now there is more foreign holdings of U.S. treasuries now than just about any time except for the last year, right? There's more than pre-pandemic, right? More foreign holding of U.S. treasuries now than there was before the pandemic. This again, like, there is the news out there that this is taking place, right? This drop in U.S. Treasury holdings, but to what extent? To how bad? And then you also have to think, why? Why are U.S. Treasuries being sold by these foreign holders, right? Why are they getting out of the Treasuries, right? De-dollarization, or is it dollarization? What do you get when you sell a Treasury? You get dollars, right? So the more they sell treasuries, the more dollars they are acquiring. That's another thing to kind of think about. And why would they do this? To pay off their debts, right? And that's another reason why they would be selling, is because they have dollar-denominated debts that they're trying to service, and the easiest way to get the dollar is to sell off your treasuries. I hope that helps. And again, like, I'm not trying to deny the fact that there is de-dollarization efforts taking place. It's just not working out well for them, right? And the more pain they want to take on, the more de-dollarization will take place. And if they want to take on a lot of pain, then they can really make the de-dollarization really significant, right? I mean, but it's painful to do it. And that's where I think a lot of people are kind of misunderstanding, or not necessarily clear on what's happening when that takes place, you know. All right, copper is sold by the ton. Copper is a hugely worldwide market. If people don't want their dollars because they're scared of de-dollarization, give those greenbacks to me. All right, it's more industry than silver because electricity. Yeah. Uranium will moon, quad U will make you geek and awesome. All right, nobody is buying weed. Nobody is buying weed. I mean, yeah, people buy weed, you know. I mean, I see people down at the dispensaries all the time. What gets me is, like, there's more dispensaries here in Astoria than, like, I mean, I couldn't believe how many popped up here. Like 6 of them or something. Speak for yourself. Nobody is buying weed. They need the electric. I mean, in Oregon, it practically spills out on the ground, right? Like, I mean, I see the signs outside this dispensaries. Like, when I was a kid, like, you would buy an eighth ounce of weed for like $50. I see signs down there that say $40 ounces, right? I mean, what does that work out to? Like $5 an ounce, or $5 an eighth? I mean, it's 10 times less than what it used to be. It's like practically free. You know, it spills out on the ground. You know, I mean, people, yeah, it's just like, it's everywhere. It's everywhere. What do you think about us approaching a year since the yield curve inverted? again, like I mean, it's a recession indicator, but really, like when you consider the situation we're in, like what does it really mean when you have a recession? Like what is the worst part of a recession? It's everybody loses their job and then they bail out the corporations, right? They bail out the banking system, bail out the corporations, piss the taxpayers off, right? That's the worst part of a recession. I mean, to those two things. But right now we don't have an issue with unemployment. I mean, we do. Like, there's a bunch of layoffs and stuff happening, but the unemployment rate isn't rising. And again, like, people will be like, "Oh, dude, you can't believe the unemployment numbers." I don't, right? I don't believe any of this stuff. But as far as what the Federal Reserve and everybody else is looking at, as far as monetary policy goes, that is what they're looking at, right? And the unemployment numbers aren't rising, like, like dramatically or anything like you would see in a recession. And then when it comes to bailing out the corporations, I feel that that's already done. Like they bailed out the corporations during the pandemic. And that's why you see a lot of zombie corporations going bankrupt right now and not getting bailed out, because they already knew that they were going to be hacking the heads off the zombie corporations. It's something that we talked about before. During the pandemic, see, a lot of people don't realize that corporate America got bailed out like significantly during the pandemic, and the people did it themselves. The people bailed out those corporations. It wasn't the people, it was the markets, right? The markets did it. And it was a really very interesting game that they played to make it happen, and we talked about it quite a few times. But they set up those special purpose vehicles, and one of them being the corporate debt lending facility, right? So this corporate debt lending facility was an entity separated from the Fed and the Treasury and funded with $600 billion or some ungodly amount of money, and then was going to be used to buy corporate debt, right? To buy the fallen angels, right? And so they said. Well, this information got out to the public, right? Got out to the markets out there that they were going to be buying all this corporate debt, and the markets started front-running the Federal Reserve by buying all the corporate bonds, right? Buying the corporate bonds in ahead of the Fed, thinking that they were going to be able to sell those to the Fed, right? So they were front-running the Fed. Fed sat back and didn't do anything. They just sat there and watched it happen. So here the markets were buying into corporate debt, thinking that they were going to be front-running the Fed, because the Fed was going to be buying all this corporate debt, and all these corporations gorged on incredibly cheap debt. So here they loaded up on all this cash, and this did two things. It gave the corporations their cash holdings, right, a cash position to be in, and it also loaded up the zombie corporations what are you going to do if you're a zombie corporation other than expand your operations? And part of that was hiring employees. And this is where a lot of the employees went up to these zombie corporations. And so now all the missing employees out there who are in the service industry are now working for these zombie corporations. As the layoffs start to happen, right, and the heads of these zombies get their heads knocked off, and the defaults start to take place, and the layoffs start to happen, these people are going to start finding positions over at the service job again, and you don't see the unemployment rise. You see how they took care of all this, like ahead of time? They can go into this recession with absolutely no worries about having to deal with any of it, right? Because they already dealt with it. Like they preloaded the recession, or preloaded the bailout for the recession. We're still here, guys. All right. What's Lynn Alden saying? I'm not sure. All right. There is debt issued in U.S. dollars that didn't even come from the U.S. That is right. That is exactly right. There is debt issued in U.S. dollars that didn't even come from the U.S. There's lots and lots and lots and lots of it. And that's the thing. Those debts, not only did they hey, I'm borrowing money from whoever, I'm going to write this debt out in U.S. dollars. They get the dollars, and then whoever received that debt instrument, right, that contract, they use that as currency as well. So not only do you have the dollars that they loaned out, right, that ended up being borrowed, but then they got the contract, and all this gets used as currency. So you can imagine that once the contract disappears, right, if it gets paid off and doesn't get rolled over into new debt, once that disappears, that's currency leaving the system, right? That tightens up the currency even more. And so as the de-dollarization takes place, you're going to have a shrinking of the currency, like the U.S. dollar, the money supply, like the global money supply, the shadow currency supply. That's why crime is skyrocketing. Now people want their cake and eat it too. AKA 40-hour work week too. No, yeah. Well, no, a 40-hour work week won't cut it. Like, I mean, if you have a really good job, good paying job, it'll cut it. But for the most part, an average job, 40 hours is not going to do it. You have to have side hustles or something else going on. If student loan forgiveness is shot down by the Supreme Court and payments and interest rates resume, how do you think that will affect things? I've enjoyed 0% interest for the last couple of years. I don't know. I mean, it's going to be quite painful, right? I mean, just like anything else, it's the burden that you have to pay. I mean, I didn't have anybody, like when I was $25,000 in debt to credit cards and medical and everything else going on, I didn't have anybody saying, hey, you're going to get a bailout for that. You know, I had to go and pay it off. And I had to work damn hard to do it. And by doing that, I was able to position myself in a way that now I can have an income, you know, because I didn't increase my standard of living after I dropped my debts. Like, well, I did a little bit when I bought the house, but for the most part, I didn't really increase my standard of living any. I kept my standard of living very low after I paid off my debts and was able to keep the money and start investing that. That's the way you do it. Like, if you have student loan debts, you got to go pay them off, right? I mean, how the government deals with that is to make you pay them off. You know, I mean, they can't. This is the problem with the forgiveness problem, right? And I've said this before. The government has a balance sheet, right? And on their balance sheet, they have a financial portion of it, right? So here you got like all your assets, right? You got real estate, you got gold, you got whatever, right? You got all these assets, right? All these bonds even, right? Maybe even whatever. Part of that is the financial portion, right? Which is the bonds, which are the financial instruments, the instruments of debt, right? That the government holds that is due back to them, right? These are basically, you know, the bonds that they have purchased, right? This financial portion. Of this financial portion of the balance sheet, like 50% of it is something called slabs, SLABS, student loan asset-backed securities. So now all these students out there who had taken out debts in student loan debts, a lot of those loans get jumbled up into a bond, right? That's all a bunch of other these student loans. Those bonds are then purchased by the government and sits on the balance sheet. If those things are to disappear, that's their balance sheet, their assets and liabilities. If all of a sudden their assets fall and their liabilities go high, that's their credit rating. So they can't just eliminate these student loans. Somebody has to purchase them, or they have to be, you know, by taxpayers or a private party, or just simply paid off, right? I mean, like by the people who have the debt. That's the only way to get rid of it. Otherwise, it will throw the balance sheet out of whack and it will ruin the credit rating. They simply can't do it, right? I mean, like, they could. I shouldn't say they can't do it. They could do it, but it's not very likely that's the way it's going to go down. They can't just make them disappear like that. So it's either going to come from tax revenue or private purchases or you simply paying it off, right? That's the way it's got to go down. No pain, no gain, yeah. Save your money. This is medieval times. Hey, Lord Humongous is in the house. Thank you very much for being here, Lord. Greeting from the Humongous. Awesome to see you, bro. Right, those companies should have went out of business. Companies create money. Hey, Lord Humongous, yeah. All right, South America been printing USD for decades. Money laundry. XRP on demand liquidity. All right, what is your opinion on the commodity super cycle beginning, middle, and again, like, these cycles, they always take place, and then like to see what it's actually going to be like as far as like, the demand for commodities or the fall in commodities. I honestly thought, like, when I was watching some of the things like, why can't I remember? I'm sorry, Chris Martin's, right? Doing the crash course When I watched the Crash Course series, I mean, I was just like, holy moly, this is an excellent, excellent presentation, right? And it really showed like peak oil, peak demand, peak production, peak all this other stuff that was happening. And when I watched that, I really led me to believe that oil prices were going to like really, really skyrocket at some point, right? Like, I mean, go astronomically high. And I took a lot of theory on with that, you know, saying, okay, well, a belief into theory that this was actually going to take place. But what ends up happening a lot of times is that the conditions that we are experiencing today aren't the same conditions by the time we get there. You know, so for example, I was thinking, oh man, this oil is going to be so expensive and everybody's going to have to like, stop driving cars or whatever. But what ends up taking place is like, the EV movement starts to come in, or some other, maybe some other fuel starts to get used. And I'm not saying like, you're going to have a fuel that just all of a sudden pops up tomorrow that everybody's going to use. I'm just saying like alternatives start to present themselves when the necessity is there, right? And so it's very difficult to say like what this commodity super cycle is going to be like and how the people are going to react to it, because like right now the demand for things like copper or lithium or whatever may not be what it will be in like 15, 20 years from now. Like it might be more or it might be less, we don't know, depending on the conditions of what we're going to experience by that time. So it's hard to say like what the commodity super cycle is going to do. All I can say is like, if you watch like the direction of where, to me, like where the power of manufacturing is, like right, it was in China, it seems to be moving to India or places like Vietnam. To me, that's probably going to be the bigger story on how much demand for all these commodities and stuff like that come from these nations as they start to ramp up their manufacturing. And then that actual ramping up of manufacturing starts bringing a standard to their people, and then that starts bringing in demand as well. So like what does this look like? How does that happen when you have AI mixed into it, or robotics or something? Like, and all of a sudden you got these changes to the environment that we aren't used to. Anyway, never pay off unsecured debt. Most agree with you. That's why the forgiveness is so unpopular. Credit scores and credit is a racket. All right. Obvious, but good time to maintain. I borrowed $3,000 in student debt and paid it back. However, I support it because education in most countries is free and we live in different circumstances now. Well, I don't know if free education is good education. Right? To me, like, if you're going to want to pay, if you want something that's the best, you got to pay the price. Right? And if it's free, it's probably not the best. And now, I granted, like, I've found that this phone will provide me with a lot of stuff, right? Including information. So education is really more about like the proof that you've been educated, right? Because you can get all the knowledge you want from the internet. I mean, that the internet will teach you anything you want to know. But what is it when you're going to get educated, right? Is you're looking for proof that you've done this. And I mean, some people might just really truly just want the knowledge and just to learn. I mean, that's, I mean, there's that. But most people are trying to get a hold of something that says, hey, look, I've proven this so that I deserve more going into the future. And a lot of people just look at the hard work that they put in to try and acquire that. Like, hey, I had to study, I had to do all these things to acquire this, right? And paying for that out of pocket is what you have to do in order to have value behind that thing, right? I mean, that's why being free isn't have any value to it. If it's free, then they just make it free for everybody, and then the value of that education wouldn't mean anything to anybody, right? But it's because it has value to it that it then has a price tag attached to it that you have to pay for in order to acquire those things, and then you can use that information to advance yourself. So being free isn't right, right? That's not the way you add value to something, including the education that you have, right? There's value behind that, and if you have paid for it, then, right, then you actually has more meaning behind it, and it's also limited to those who are actually willing to put forth the energy to pay for it and to actually get the knowledge from it. Right? Making it free is probably is not smart. It's not the smart way to go about it. I mean, not in my opinion, as far as like having value for that education. Like if you want to be educated, if you just want to be smart, then go on the internet and get all the information you want, right? You know what I mean? But if you want to use that education to advance yourself, then it can't be free for everybody. You have to pay for it. All right, Redizon, thank you so much for the $4.99, man. Navian, formerly part of Sallie Mae, illegally cheated borrowers out of repayment rights through shortcuts and deception. January 18th, 2017, they profited. Huh. Yeah, there was a lot of scams happening back in the day, and there's even like, have you heard about these issues with people all of a sudden finding themselves in foreclosure due to the adjustment that had taken place back during the great financial crisis? So like a lot of these people had their mortgages adjusted, or whatever, they quit making their payments, and this great financial crisis thing was taking place, and they're trying to keep everybody in their house and stuff. Well, part of these mortgages, they thought like had just disappeared. Like, nobody was asking for the money, nobody said anything about it. And now here it is, all these years later, and they're getting popped up with these foreclosure notices. Failure to make a payment on this mortgage they didn't even know they had, right? Because they thought it disappeared back when they did this adjustment, but that's not what the case was. And so all of a sudden, these things are hashing up. So, like, I think about that, in a sense. It's just like, man, was this kind of predatory in a sense? Like, I mean, if you didn't know that you were involved in this, or didn't realize that it had just completely just didn't just disappear, you're just naive to it or whatever. But yeah, how does this occur? I mean, somebody had to have known that these people didn't know, right? I mean, maybe they didn't. Maybe they were just like, oh shit, look at that. Hey, let's go see if we can get some money off of this. Hey, you owe me, or else I'm going to put you in foreclosure. All right. Hey there, Simon. How are you? I'm doing well, man. Glenn Godfrey. Thanks, Simon. You're welcome, man. Thanks for being here. Congrats. Don't know what an investment is. Oh, graduates. That's what it says. Congrats. What am I thinking? It's the glare on here. I'm starting to get tired, I guess. Graduates don't know what an investment is, yeah? Trees pay for us to breathe. Okay, what do trees pay for to breathe? What what do we pay for trees to breathe? Investing in yourself is a poster child for going out of business. Okay. So what if I want to start a business where I went around doing like speaking engagements, writing books, doing stuff like that? Like if I could make that happen, would that not be an investment in myself? Or maybe I should just stay at the lumberyard for the rest of my life, where I know I can get my 40-hour work week, right? I mean, which one does it sound like I should do? All right. What's happening in Oregon when it comes to high inflation for food in your state? Well, up until recently, my wife worked at a grocery, so like food for us was, and she's a really, really good shopper. So like food for us, and even shopping for food, has never been like I hear a lot of people talk about how much they spend on food, and I'm thinking, wow, my wife must just do really good at shopping, because like, although I mean, food's expensive and stuff like that, we just, I guess, take advantage of sale prices, of we cook a lot at home, so we can prepare meals and just take advantage of that. We know a lot of people from the who do a lot of like hunting and fishing, and just growing of food themselves. So I don't know, like, to me personally, I don't really look at like food as critically as a lot of other people do. To me, like, food is not in shortage in that sense. Food will eventually come in shortage on a grand scale, like globally. And that's going to be very difficult because here in the United States, we're not going to see the shortage of food. We're going to have food here, but it's going to get expensive. And we already see that happening. That's why, I mean, you see so many people, talking about it. Knowing that's coming and and being able to, again, take advantage of sales or being able to can meat, like that's another thing. Like can food. So like putting it in jars, sealing it up for later. If we can see chickens on sale or something like that, we can buy lots of it. We don't need to freeze it. We can can it. Now we do freeze a lot of meat, so we store up on it when we see the good prices on it. But I think that's just being, frugal in nature. All right. It's gotta pay better than lumber. Yeah, lumber support, lumber timber striking out on your own. It's not easy. But better safe than sorry, though. All right, bought the 4x4s for my projects, locked in the material expense at what I feel are very low lumber prices. Yeah, I think right now, as far as lumber prices go, I don't think you're going to have much of a better opportunity to buy cheap lumber than it is right now. Everything that I see, as far as like the mill curtailments, the inventory levels, the wildfires that are going to start, impacting the mill's production eventually. I mean, not at this point, but it will soon. All that stuff is going to lead to higher prices. And once you have like an inventory issue, especially like the input going into the mills from the wildfires or something, that's going to create a lot of speculation. And now we have more people who can speculate in the market now that the futures contracts have adjusted. That's something else that I don't know if a lot of people realize, that the futures contract on lumber has moved from the hub in the British Columbia area to Chicago. And the contracts are smaller. They're about a quarter of the size. So they went from 110,000 board foot contract in British Columbia to a quarter of that size. So what, 110, maybe 55. So what, it was right around 25,000, I guess, board feet. A little over 25,000 board feet shipped to Chicago. And so that's how the futures prices have now been adjusted. So when you see them, they jump from like, I don't know, like around 400 per thousand up to like 5. That's the reason, because they have that added shipping cost. And now there's more speculation going into the market because buyers of like, before 110,000 board feet was an entire rail car full of lumber. Now it's a semi-load size. So it's going to be a lot easier for like, lumber yards or wholesalers or something like that to buy smaller contracts, and that'll get more people involved in the market, which you would think speculation is a bad idea, but actually it would be good for this particular one because there wasn't a lot of players in the game, right? Now there's more players. All right. I'm glad to hear you are prepared and the wife is taking advantage of the sales and discounts while the stores are still honoring them. No, it's out there. I mean, we saw this recently, like pork prices dropped significantly. The pork producers overproduced, right, at some point. And then what ends up happening is that if you have an overproduction, then your profits fall, and then you have to start shutting down your facilities, right? And that's what we saw taking place in pork here just recently. So pork prices had dropped dramatically there for a little while. And, in fact, we're having pork chops tonight. I'm going to go home and do that here in just a little bit. Just getting home from camping up. Sure. All right. Hey, Jaws, it's good to see you, man. Just getting home from camping trip with the kids, going to watch this in its entirety after I get them to bed. Well, right on, Jaws. It's good to see you here, man. Thanks for popping up and commenting. All right. Hedge risk for smaller yards, yeah. Easy to set up automated hedging systems so lumber yards don't have any price risk. Beta neutral is the term. Beta neutral. Oh, I see. Bon appetit. Yeah. Guys, it's been fun, but I'm starting to lose my voice a little bit here. Starting to like fade, and the water's not quite cutting it. But I really appreciate everybody being here. This has been a wonderful conversations. We got 161 of you up in here right now with 221 likes, $89 in super chats. You guys are always so generous with the super chats. I thank you so much for the support for the channel. I mean, I can't believe how much you changed my life, and you guys know that too. And I mean, I just can't thank you enough for this. Let me see. Let me read one more here. I took the advice of Simon and others before increases of price goods took hold, purchased electronic equipment for development of products and investigation. Example of investing in myself. Well, good for you. I have BLT sandwich. Oh, you got a BLT? Right on. Be good in the hood, y'all. All right. Young one, peace. Thank you guys so much for being here again. Uneducated economist, you let me know.